tell me in the chat box. Okay, a very warm welcome to everyone over YouTube. I hope I'm properly audible, and people who are on Zoom, you can also tell me. Yes, I think it's fine. Yes, a very good morning. I hope you all are really excited, enthusiastic today so as to begin the RBI Grade B live classes. Okay, so it's wonderful to have all of you over here, and today we'll be beginning our live classes with the first session. Here we'll be discussing finance. Okay, so talking about these live classes are part of our gold and silver course, and people who are over YouTube, let me tell you that this is a demo session wherein we will be you can have a look at how these live classes are conducted, and you can actually be part of these live classes by availing the course. Okay, so 2 classes would be demo, and those will be streamed over YouTube also, so you can definitely watch them over YouTube and have an idea of how these classes are actually conducted and be a part of the course if you feel yes, this thing is going to benefit me. So today we'll be starting with the discussion of finance, which is wonderful to start with because it is slightly technical subject, and starting with finance actually gives us an edge because you do have to understand the static part, you do have to understand the current affairs as far as the dynamic nature of the question paper is concerned. Okay, so this is with respect to the finance and management paper of phase 2, right? So wherein we will be talking about the same. I'm sharing my screen. You can all tell me if the screen is also visible to you, and people over Zoom, I would request if you can switch on your camera, that would be really wonderful. This session is going to be totally interactive, so I would request all of you to please participate right over here in large numbers. I hope so. Yes, good morning to everyone. I hope things are really fine. Okay, so let us quickly begin. Here we will be discussing about the finance and management paper, and here the first session, right? Yes, are you able to view on YouTube also? Please tell me. Yeah, many people have joined over Zoom. You can please try once again, or else you can just mail, right? If you are unable to join, I can see many are complaining over YouTube that you are unable to join, so please you can retry, right? Yes, so today we'll be starting with the subject of finance, wherein we'll get ourselves introduced to this particular subject, how to prepare finance for the FM paper, because you know in phase 2 you have this finance and management paper wherein the finance subject is slightly considered to be dynamic, slightly considered to be technical. So we'll be starting with that and preparing so early before the examination. Sir, why do we have to do that? Just because if you are very sure and good at the static part, you will be really properly doing the current affairs, and a combination of both is something that is asked in the FM paper as far as the finance part is concerned. So to get a good grip of this particular part, it is really important to go through this particular static part right before the examination. So first of all, we will be discussing today, our agenda is to talk about the introduction to the Indian financial system, which is really important. Then we'll be talking about time value of money. Okay, so we will try to discuss both these things, talking about the importance of this particular finance subject. Okay, we'll also get ourselves oriented towards this, right? Maximum. Okay, right. Okay, definitely you can mail this, whoever is unable to join. I can see many of you over YouTube, right? You can mail over hello@edutab.co.in about the same. Okay, for today you can please join over YouTube and watch the session, right? So please do mail after the session whatever query, whatever issue you are facing with respect to joining the session, right? Yeah, sure. Edit Stan, sure, we will do that. Now talking about the importance of this subject, as you know, in phase 2 of RBI Grade B examination, you have this paper 1, which is economics and social issues, ESI. Then you have paper 2, which is English, and then there is this finance and management paper that you definitely have to clear. So there are two subjects that you will have to prepare as far as this particular paper is concerned. First is finance and the other part is management, right? So talking about finance and management paper, the management part is something which is mostly static in nature, but the finance part is dynamic, because you do have questions from the static part, you do have questions from the current affairs also. And as you can see, 50% of the paper is objective, as you know, and the 50% of it is descriptive. So these classes are oriented in such a manner that the preparation with respect to the objective as well as the descriptive part is actually taken care of. Okay, so we will also be studying the concepts, we will be solving some questions, and we'll also be having a look at how you can actually go for the descriptive part, how you can attempt the descriptive part. Okay, I would request everyone to please if you can mute yourself, that would be wonderful. So yes, we'll be talking in both the ways. Okay, so this is the paper that we are talking about, and finance is something that we are beginning with. It is seen that mostly from the finance part around 50 marks questions are asked. Management part also similar, but yeah, the trend might change, it might be slightly differing, sometimes 55 marks from the finance paper, that also happens. But anyway, this is what is something that we are going to start with. Okay, so on that note, let us quickly begin and talk about various other things. So talking about the cutoff of phase 2 as far as 2025 is concerned, the overall cutoff, if you see phase 2 cutoff, if you see, that has remained around 171.50 out of 300, and if you see the overall cutoff, it has remained around 230.75 out of 375 marks. Okay, I'm not going through the entire pattern, but I just want you to know that the cutoff marks have remained around 60 to 65% of the entire marks that are allotted, right? So we also have to keep in mind that with respect to each of these papers, if you are at least aiming a 60 to 65% marks, then only you will be able to clear the overall cutoff. Because if to get the overall cutoff 60 to 65% in the overall cutoff, definitely you will have to score in each and every part 60 to 65%. Do you agree with me on that? So that is why we have to aim in that manner, and that can happen. You just cannot depend on management part, you will have to prepare the finance part also really well. Of course, management too plays a very important role. So as we know, we have ESI, finance and management, descriptive writing and descriptive English as far as to prepare as far as the phase 2 is concerned. So we will be having classes with respect to all of these. We are starting with the finance classes over here. Now in the FM paper, as I already said, it's a trend that mostly the half of the paper is with having the questions with respect to the finance part, okay, be it objective, be it descriptive, and the other half it has the management question. Okay, we have seen generally that the finance part actually carries a slightly higher weightage most of the times, 50 to 55 marks. Of course, it can change, sometimes it can be 50, sometimes it can be 45 too, but this is the general trend. And if we talk about the management part, 45 to 50 marks. Okay, so in the management part, obviously this is mostly static in nature, you can predict questions, you can also prepare really comprehensively, so you should be aiming a high score of around 40 marks around as far as the management part is concerned. But the finance part is something that we should be dealing with in a very proper manner, because 50% of the questions as far as finance is concerned is from the static. Generally this is something that is seen. Well, if you see, recently the RBI Grade B examination 2026 was conducted, but we saw that many of the questions were from the static part, many were from the current affairs also. So around 50% from the static part, around 50% from the current part is something that is generally seen. Of course, this might also change, this might also differ a little. Okay, so that is the thing. So on that note, I would say we also should be aiming, as far as the finance part is concerned, to at least get around 35 marks or something, 35 to, if possible, if you are really good at the static as well as the current affairs, at least 40 marks. Okay, so in that way the FM paper would be really helpful for you to fetch good marks and take your score really high as far as clearing the phase 2 cutoff is concerned, clearing the overall cutoff and being in the list is concerned. Okay, so yes, on that note we are going to begin talking about the finance part, and the first subject that we are going to have a look at over here Okay, current affairs part would be discussed later on. Okay, so you'll be having current affairs related classes also, nothing to worry about that. So right now we are beginning with the static part. Okay, current affairs, of course you do have various sources mentioned as far as the notifications concerned, and as far as the PYQs are concerned, various sources have been taken into consideration, right? So in detail we will be discussing about it later on. Now we are starting with the static part, because obviously this is the time wherein you will have to lay down your foundation. Okay, so to lay down the foundation as far as the finance part, or if you talk about the ESI, you also would be having the SI static classes later on. So laying down the foundation is really important, wherein if you know the static part really well, the current affairs would be understood really well. Okay, so yes, you because as far as RBI exam is concerned, around 6 to 7 months prior to the phase 1 examination you will have to prepare the current affairs. It would be really good if you start your preparation of the current affairs from October, November mainly, right? So we'll be discussing about it later on as far as these classes are concerned, but now we are concerned with the static part. So Nidhi, is that fine? Let's quickly begin our session with the first thing to discuss today, that is introduction to the Indian financial system. Okay, so talking about finance, first of all you should know the entire framework that is there in India, isn't it? And for that sake you should first of all know what a financial system is. Okay, so we'll be discussing this in detail, and also having a look at how the Indian financial system actually has got developed, actually has taken into it has formed in India. Okay, so we will be talking about all of these things. Talking about the agenda of this of discussion on this particular chapter, we will be first of all getting ourselves introduced. To understand Indian financial system, you should know financial system. This is what I said. So first of all we'll talk about a financial system, what a financial system is, what are the characteristics of the financial system. Once that you know what a financial system is, the characteristics are also really important. And also please do pay attention, what we are doing in between the sessions is that we are actually having some questions to answer. Mostly these are based upon the PYQs, so pay attention, everybody has to answer those questions. Let's see who's going to answer them first and in a proper manner. Okay, so I hope I have been able to gain all of your attention. Moving to the third part that we'll be discussing, that is the role and importance of financial system. Once we know the characteristics, how those characteristics are actually going to help as far as the Indian economical or the Indian financial setup is concerned, so we'll be talking about that. For that sake, any financial setup. Okay, and we'll be differentiating between what financial systems are and what financial markets are. Many a times we get confused between these two terms, so it's really important to differentiate. And also finally we'll be talking about the Indian financial market. Once we know what financial system is, we'll be then moving towards talking about what is the setup in India. Okay, let's quickly begin. So here, first things first, we'll be talking about the financial system. Arey sir, you have immediately given a definition over here. Yes, don't worry, we'll be breaking down the definition. We'll be trying to understand each and every part of the definition really well. So what is the definition of a financial system? Financial system refers to a network of institutions, markets, instruments and intermediaries, right, that facilitate the flow of funds within an economy. Okay, now that we have defined this financial system, we will be having a look at each and every part of this particular definition, and then we'll club everything, and by then you will be able to understand what a financial system is. Here, financial system, it is known to be a network. Okay, network, when can a network come into being? Only when there are so many entities present. Okay, like we all have formed a network over here. Many of you might be joining from various other places, but we all have come over here together, so of having a single aim in our mind, that we need to prepare the finance subject for the RBI Grade B examination. Okay, so in that way, a whole lot of entities, when they come together, they work with each other. There is formation of a network. Okay, what are these different entities? First one is institution, then we have markets, instruments, intermediaries. Okay, so we'll be talking about each one of these one by one. Talking about institutions, there are various institutions including banks, non-banking financial institutions, insurance companies, mutual funds. So the financial system actually runs because of these institutions. For example, let us say you need some money so as to do some business. You have an idea, startup idea in your mind. Then what are you going to do? Who will come in your mind first? Of course you will be thinking, okay, if I could take some loan from the bank, okay, if I, after taking an initial loan or something, only then you will be pitching your idea to someone and people would start investing. You will have to take some initial initiative, isn't it? So that initiative is taking a loan from the bank. Taking the simple example, the first thing that comes into our mind whenever we talk about any transaction, whenever we talk about participating in the financial system, is, let's say, a bank, for example. Okay, so these institutions actually play the role of facilitating the flow of the funds. Okay, funds, mainly what financial system is all about, it is all about different transactions, flow of funds. Okay, the funds or the money keeps moving from one entity to another. Who facilitates the movement of this money? It is these institutions, like I gave you the example of the banks. Now talking about other entities, there are also non-banking financial institutions. Okay, so we will be talking in detail. We have an entire chapter on this particular non-banking financial institutions. We have an entire chapter discussing the banking system. Don't worry about that, but a basic idea is something that we are taking over here. Talking about the non-banking financial institutions, they also perform the activities similar to a bank. Okay, many times they do take some deposits. What a bank does, if I just ask you, what a bank does? It takes deposits, isn't it? People deposit money, whoever has money, right? Whoever has excess of it, or they want to deposit the money at a safer place, they will be depositing money in the bank, and then that money is routed out to people who need the money. Okay, loans are given, advances are given. This thing happens as far as as far as the banks are concerned. Non-banking financial institutions also mostly perform similar activities, but they are not formed as per the Banking Regulation Act. Okay, so we'll talk about this particular act also. If at all there is any bank that is established, it has to be established as per the provisions of the Banking Regulation Act. Okay, there are other differences also, but for now let's just discuss this, that NBFCs do perform activities similar to the banks, but they are not formed as per the Banking Regulation Act 1949. Okay, that is one main thing. There are other things also, we'll differentiate later on. Talking about insurance companies, they also, you know about different kinds of insurance, life insurance, then there is general insurance. So these insurance companies do provide these insurance, which is like a safety with respect to different situations, right? Sudden situations that might happen. It might be life of a person or a particular property that you might be having, let's say some car insurance or bike insurance. All of these are something that we are very well aware of. Mutual funds help in investments with respect to, if anybody wants to invest in, let's say, the share market, let's say they want to invest in bonds. So mutual funds are certain entities who would definitely help with that kind of investment, wherein we might not have much idea with respect to the share market, isn't it? So these mutual funds actually have experts who take this money and invest on your behalf. Okay, so a simple definition would be that, a simple understanding would be that. Now we know what these institutions do. Now moving ahead, if we talk about these institutions, they have to interact with someone, isn't it? Who these institutions would be helping? They would be helping people who would be wanting money. People who have money would be actually providing it to these institutions, and the institutions would be helping in proper channelizing of that money, isn't it? So that interaction actually happens in the markets. Okay, there are people who have excess of money, want to deposit, they would be coming over here in the market. What a market generally is, you have seen a normal market, right? If I just ask you what a market is, what would you say? Would you want to let me know in the chat box what is a market in general, if I just ask you? What is your idea? Please let's discuss a little. Also over YouTube you can also answer. Yes. Yeah, it's a trial class today and tomorrow. Amisha, it would be over YouTube. Later classes would be on. Later classes might not be on YouTube, right? You can join the course. Market such it funds. Okay. Yes. Please do answer in the chat box. I am waiting for your answers. Okay, yes, where there are, mostly I can see many of you are saying where there are, where trade happens. Tejas is saying, Pranav is saying place to buy goods. Okay, yes. So there are mainly four things we can say. One is there are goods and services. Very good, almost all of you have answered it correct. There are goods and services provided in the market. There are buyers in the market. Okay, taking a general idea. There are some sellers, right? And there are prices of these particular goods and services. Okay, so this is what a market is. So here facilitating buyers, sellers, of course here we are talking about movement of the fund, someone who needs the fund, someone who has the funds, right? And some people who facilitate them. So these institutions actually facilitate them. You can say the buyers might be people who would be wanting who would be actually wanting the fund. Sellers might be people who would be lenders. You can take the comparison in that manner. Okay, and there can be different kinds of market, like there is market with respect to vegetables only. We have seen market with respect to, let's say, electronics only. In that way, in the financial setup, we have markets of different instruments. Okay, we'll talk about instruments in the next part. So stock exchanges actually have the shares, or we will be talking about shares also as we move ahead. Shares are something that are actually sold out. They are bought, buying and selling. Okay, like we saw over here, there are buyers and sellers. So in the financial markets, we have buying and selling of certain instruments. Stock exchanges are those wherein buying and selling of shares actually happens. Okay, we'll talk about shares in detail, don't worry, as we move ahead. There is also bond market wherein buying and selling of bonds takes place. Okay, so there is money market wherein simple loan type of instruments are there, wherein one person or one entity gives the loan, the other person receives it, but for a very short period of time. This market actually functions for a period of time less than or equal to 1 year. Okay, apart from that, there might be capital markets also, which function for with tenures greater than 1 year. Okay, so these are some of the markets. Now apart from that, I spoke about instruments. What are actually traded? What are actually the goods and services that we are talking about? So obviously in the financial market we have money only traded, but there are different ways. Like you need variety, right? If I just ask you about ice cream, which is your favorite one, you would say yes, I like vanilla or I like strawberry, right? So there is a whole lot of variety. So the funds are moved, but there are different instruments through which these funds keep moving. First one, as I said, there are these shares. Okay, shares actually whenever there are companies who want to expand, companies who want to have some money so as to grow their business, they issue something called shares. Okay, and the on these shares people do give their own money, whatever money they have, they give out those that money to these companies, and the companies grow. Okay, for now we'll understand in that manner. In a similar way, there are something called bonds. Okay, these bonds also take up money from the people, and companies do issue these particular bonds. Not just companies, there are other entities also, but yeah, for now taking into consideration, companies issue the bonds, people buy the bonds, and then these companies get money and they grow, and later on they give the profit to these people who have bought these bonds. Okay, similarly we have something called derivatives, which we will be discussing as we move ahead. So these are the instruments. Like there is vegetable market, so vegetables are bought and then money is given and all of these things happen. Similarly here we have shares, bonds market, derivatives. All of these are the instruments that are actually exchanged. And many a times what happens is, if I just talk about Bombay Stock Exchange, I'll just ask you, go to Bombay Stock Exchange and buy a share. You must have heard about Bombay Stock Exchange, right? Can you just go and buy the shares from the Bombay Stock Exchange directly? it might not be possible. We might not know the right way to do it. Okay, even if you want to buy it over the online stock exchanges, it is difficult. Do you know any special apps that actually help us in buying these shares, bonds and all, right? Do you have any idea of them? Yes, they're just saying grow app shares. Soumya, Yamni, absolutely correct. Mahima, absolutely correct. Okay, yeah, is the voice clear? Deepanshu is saying there's some issue, you can please tell me. A Zerodha also absolutely correct, right? Upstock, yes. Can you tell me, is the voice fine, everyone? Yes, clear. Okay, thank you, Pragati. So here we can say these apps actually connect us to the market, actually connect us to the institutions, right? And by connecting ourselves to the institutions, we are able to deal with all of these instruments. Okay, you want to buy a share, you just felt I want to buy shares today. So would you be able to do it as such, just connect with BSE, Bombay Stock Exchange, hello, I want to buy shares? No, this is the middlemen, the brokers we call them. These are the main intermediaries who actually connect us to these specific entities. Okay, so there are LIC agents, they help us in buying the life insurance from the life insurance company corporation, right? From there you can buy this life insurance. Similarly, we have brokers who actually connect us to these Bombay Stock Exchange or other stock exchanges, and then from there you can be buying the shares. Okay, so this is what is the role of the intermediaries. Okay, so that is how all of these entities, they come together. There is a network of all of these entities. Is that understood? What institutions are, what markets are, what instruments are, what intermediaries are, all of them come together, and that particular coming together is called a network. Now all of them have to function within a particular set of rules, isn't it? Who forms these rules? If you just talk about banks, who forms the rules with respect to banks? Can you just tell me? Yes, Pragati is right, it's RBI, isn't it? Yes, absolutely. Over YouTube, Darshan, Garima Chauhan, Sarita, absolutely correct. Yes, it's RBI who forms the rules and regulations with respect to the banking sector. If we talk about the stock exchanges, it is SEBI. Okay, so in that way we have different entities forming the rules, and these entities are called the regulators. Their main function is to form the rules and regulations. Okay, so they are called the regulator who forms the regulations. Now apart from that, they also need to ensure that these rules and regulations are actually being implemented, actually being followed. Just form the rule, Haji, our work is done. No, not like that. They'll have to see whether it is getting followed also. So they also have a role of a supervisor who actually takes care that, yeah, whatever rule has been formed, that has to be followed too. We will discuss about regulators in detail. So all of these, the regulator also forms an umbrella under which all of these entities function. The rules and regulations are taken care of, and if there is any issue, regulator takes care of it. Okay, so that is the thing. So what is the aim of this entire network? The aim is to ensure smooth flow of funds within a particular economy. So now we'll be talking about the other part. We have understood this part of the definition. Now we'll talk about the other part. What is this? Facilitation of the flow of funds. And the flow of funds has to happen in a smooth manner. It is not that it's just happening. It has to happen in a smooth manner. So we'll talk about what this smooth flow of funds is all about. Okay. So now we are moving into the next part, wherein we are talking about what this term smooth flow of funds actually means. It refers to the efficient movement and allocation of the funds, okay, or the financial resources within a financial system or the economy. So what is this smooth flow of funds? It means efficient movement. The money moves from one entity to another. That has to happen in an efficient manner. Apart from that, it has to get allocated properly. Okay, whoever actually needs it should be given. Okay, it is not that like you are wanting to help someone. If there is a person whom you are helping who doesn't actually need help, what will happen of your effort of helping? It will go in waste. Okay, that's totally going waste, isn't it? So in the same way, the allocation of the funds also needs to happen to the right entities, and that is, if these things are ensured, it is called smooth flow of funds. Funds can move in any manner, but yeah, it has to happen in a smooth way. So let's see. So here, talking about flow of funds, we can synonymously talk about flow of capital. Okay, the money is generally in the financial markets or the financial system, it is also called flow of capital. Okay, we'll talk about the term capital in detail later on, but for now let's say the flow of funds is also sometimes called flow of capital. It is nothing but the sorry, flow of money itself. Okay, now what can be an example of this thing? Like, let's say here we have this girl, let's say her name is Rita. Okay, we'll talk about them, they're really wonderful people. So Rita actually saves some money. Okay, she has got some money from her father and she's saving that money. Where will she save that money? She will be saving that money in the bank, isn't it? Let's say that money is given out to Rishi in the form of a loan, right? He needs some education loan to study, so that money is given out to Rishi. Now can you say the funds have been efficiently moved over here? Can you say the funds have been properly allocated over here? Yes. Okay, because here she wants to do some saving, that has happened. The funds have been given out to Rishi because Rishi wants to actually go ahead and take a loan and utilize that for the education purposes. So yes, let's say here we have Neil, who is actually wanting to invest some money in the share market. Okay, so he's buying some shares. Yes. Apart from that, here we have Professor Vinay, who's actually someone who creates curiosity and also would be helping us later on to understand various proper concepts of finance really well. So Professor Vinay is actually selling some shares. Okay, so with what Professor Vinay would be interacting with the stock exchanges, stock markets, isn't it? So here also buying of shares has happened, money has moved and some shares have been bought by Neil, and then selling of shares has happened, so shares have been sold by Professor Vinay and he has got his money by selling of these particular shares. Okay, here also the flow of funds has happened, talking about the stock markets, isn't it? So these are just some examples wherein we can see the efficient movement and the allocation of the funds has happened. Okay, so what does this smooth flow of funds actually mean? If we keep it into perspective and have a look at it, whoever is a saver, like we saw in the previous slide, okay, Rita wanted to save, so she's just giving that money away to the bank. Whoever is an investor, like we saw Neil was wanting to invest, right? And there are these intermediaries who are actually connecting people, all of these people, to the different institutions, right? Savers, investors, intermediaries actually are able to give this money properly to the borrowers and entities who are in need of money. Okay, we have seen this very clearly. That is what is called the flow of fund. Okay, and this basic flow of fund should be happening in a easy and efficient manner, then only we can say it is efficiently moved and allocation of the funds has happened in the proper manner. Okay, so when can we say this flow of funds is actually smooth, right? In the previous slide we saw there was flow of funds, but when can we say it is smooth? When it is without, let me tell you, without, right? We cannot say whenever these funds are moving there cannot be any issue at all. Can we ensure that? So without what might not be the right word. With minimal what? Obstacles, minimal delays or minimal inefficiencies. Okay, so flow of funds we have understood, movement of the money, but when will it be smooth? When there are minimal obstacles as far as the movement of the money is concerned. Let us say Rita has deposited 10,000 rupees, but somehow that is not getting reflected in her account. She did deposit, but that is not reflected in her account. Okay, so that's a kind of an obstacle if she wants to actually do some transaction later on, isn't it? Then the money has been deposited, but it is not getting reflected. That also displays that it is a delay in the process of having the money getting reflected in the account. Okay, she cannot use that money as such because it is not getting it is not seen in the account itself. So that's a delay, that is an inefficiency too. We can say that is an inefficiency. Let's say she has deposited 10,000, but what she can see in the account is just 5,000. Okay, is that right? Okay, let's say you have deposited 10,000, but you see in your account only 5,000. Is that right? Absolutely no. Okay, so that is an inefficiency on the part of the financial system. Okay, so these should not be happening. No, should not be happening. These might happen, but that should be minimized. Okay, minimum number of such inefficiencies, obstacles, delays are there, only then we can say that yes, this a particular flow of funds is a smooth flow of fund, like we saw in the example, and I gave you the same example and cleared this thing. So that is called smooth flow of fund. Now is the concept understood to you that the flow of fund, yes, the money is deposited, it is taken out in the form of loan, yes, that's fine, but it has to happen in the efficient manner. The movement has to be efficient and it has to be allocated in the proper manner. For that, smooth flow of funds has to happen. Smooth flow of fund actually is wherein the flow of funds happen with minimal amount of obstacles, delays and inefficiencies. I gave examples for those also. I hope with that you have understood what a financial system is. If you just go ahead and refer to the definition that we were having a look at, the financial system refers to network of institutions, markets, instruments and intermediaries, okay, is that understood, that facilitate the flow of funds within an economy, and that flow of funds has to be in a smooth manner, and we have seen what that smooth flow of funds actually means. Okay, is there any doubt till here? Is it understood till here? Please to let me know. If that is understood, right, you can just tell me by yes in the chat box if things are clear, right? If that is understood, congratulations my dear friends, we have covered the basic part, that is we have understood what a proper financial system is. Now moving ahead, we'll be talking about the components of the financial systems. Yes, thank you so much, thanks all. What are these financial institutions, what are financial markets, and we'll be talking about other entities. Okay, so we spoke about financial institutions already, right? We saw that there are banks, NBFCs and these companies and all insurance companies. Then we also spoke about financial markets. What we have as we move further ahead is that we'll be differentiating between financial market and the financial system. We saw that there are stock exchanges, there are bond markets, money markets, okay? And the third component over here is talking about the regulatory bodies, okay? So we'll be having a look at that also. Right, now we'll be talking about these regulatory bodies. What do you think is the role of these regulatory bodies? We know we are preparing for the Reserve Bank of India RBI examination itself, okay? And if we see over here, regulatory body, yeah, so RBI itself is a regulatory body. It regulates which sector? If I just ask you again the other way around the question, so what can you say? So these regulatory bodies such as the central banks, yes, absolutely, the banking sector, isn't it? Then the securities regulator, insurance regulator. Who is the insurance regulator? Who will tell me in 5 letters very quickly in the chat box? Yes, absolutely, it's IRDAI. Sorry, so Insurance Regulatory and Development Association of India. Okay, see, we have IRDAI. For that sake, if I ask you who is the regulator for the pension sector, what would you say? You can tell me in the chat box very quickly in 5 letters again. Okay, yes, absolutely, everybody's answer is right. It's the PFRDA, right? So yes, they do play a crucial role. What role do they play in ensuring the smooth functioning of the financial system? How do they play this crucial role? They can be called the guardians of the entire financial system. So we can just compare them to superheroes, right? And we can say the first and foremost function that they have is to govern and oversee the financial activities. How will they govern the activities? Can you just tell me? I already gave you a hint as we spoke about. You have to tell me now. How will they govern this entire system? Like if we talk about RBI, how is RBI actually taking care? Yes, very good, Raj. Raj's answer is right. By forming the rules and regulations for the system, they will be governing in the sense just to tell how things have to be done. And oversee, how will they oversee? Can anyone tell me that also? I told you. Okay. Yes, how will they oversee specifically? Yes, Tejas is right, by supervising the system, that yeah, whatever has been given out, whatever rules and regulations have been given out, they are being followed, implemented or not. Not just saying that they are being followed, they do have to help also. Okay, many times we may not know how to follow that, so they do help also. They do provide help with respect to how these rules and regulations are to be followed. So that brings us to the second part, which is like they set the rules, regulations and standards, which is very clearly understood already. Apart from that, they safeguard the consumers' interests. Okay, so whatever are the interests of the consumers, like you are putting your money in the bank, how are you, on whose actual security you are putting the money in the bank? Who is guaranteeing that if at all there is any issue, I am there for you? Who is that guardian over there? Okay, if you're putting, banks themselves are guaranteeing, but yeah, there has to be a super guardian, superhero over them. Okay, so that superhero is our Reserve Bank of India, isn't it? So on the Reserve Bank of India's guarantee, you are able to put the money in the bank. Apart from that, there is also another structure that RBI has created, wherein if you are putting your money in the bank, there is a insurance of 5 lakh rupees that is created with respect to your money in the bank. Do you know that? I hope many of you know. And that is actually taken care of by a specific organization. Do you know about that organization? Whenever you put your money, yes, Ria, absolutely right. So it's DICGC. We'll talk about that also, don't worry, right? So DICGC actually takes care that whenever you put some money in the bank, your insurance policy is created, and then out of, if the bank is actually bankrupt, it is not unable to give out any money, then out of that insurance policy you will be getting money. You need not worry. Okay, so that is the thing. What is the limit for this? That is 5 lakh. Okay, maximum is 5 lakhs. So anyway, we'll talk about it. So this is how the interests of the consumers are safeguarded. This is just an example. There are various things that the RBI comes up with. For that sake, all other regulators also, they promote transparency and protect the consumers. Already we have seen how they protect the consumers, and there is transparency in the sense, if at all the bank is unable to give money, what would happen? Yes, there is DICGC, there is this insurance that you have, taking the same example, right? So all of these things are there. And also RBI actually wants all of these banks to give out so many give out a lot of information, right, with respect to how they are functioning. Various reports are to be given to RBI. Okay, I'm just talking about RBI, taking an example. The same thing applies for all other regulators, be it SEBI also wants all of the stock exchanges, different companies to give information to SEBI. Okay, so that if when we'll moving ahead and we'll be talking about accounting, okay, there we will see that SEBI has these rule with respect to the listed companies. Okay, so there are companies, certain companies which are called listed companies. We'll talk about what these listed companies are later on. So these listed companies actually have to give out or prepare accounts and produce it to SEBI on a quarterly basis. Okay, so in that way all this information is taken. What does that mean? That is a transparency. The information of these companies is actually with these regulators, and since these regulators are the superheroes, they'll be taking care that the information that they have got, it is in the right direction, the companies are functioning properly, and in that way ensure that whatever the sector they are concerned with, that particular sector functions properly and well. Okay, so this is the main role as far as the regulatory bodies are concerned. Now what we'll be having in between, as I told you, we'll be attempting some questions, and now that you have understood a whole lot about this particular chapter, it is time for the Lord Narasimha rapid fire rounds. Are you all ready? Okay, so these questions would be rapid fire. You will have to choose from A, B, C, D, E, right? Quickly choose any one of the option. You can just type, you have to type the question number also, so that I can differentiate. Okay, because I won't be able to differentiate otherwise. So let's see who answers it first. Okay, so here is your first question. Please try to answer that. Over YouTube, you can also please answer. I'm waiting for your answers too. Yeah, I don't know about switching off the captions, Ashwini. Yes. Wonderful. So here I can see the answers are given. Pragati, I think Pragati, I know you already. Is it? So yes, Pragati has given the answer first. Then we have Charushri, I think. Yeah, Tejas, Raj, Yamni, everybody's answer I think mostly is correct. Okay, over YouTube we have the answer given first by Amisha. Wonderful. So what is the question? What is the most appropriate definition of a financial system? Okay. So we have seen the financial system can be very properly defined as you can see in the C part. Complex network of institutions, markets and instruments, right? Instruments and intermediaries facilitating the flow of funds. Very properly we have seen all parts of this definition. You cannot limit it to like network of only banks. You cannot say it is a system that deals with stock markets only. This is limiting the financial system. Government controlled monetary mechanism, absolutely not. System limited to lending and borrowing activities, obviously not. There are a whole lot of things. Of course these can form part of the financial system, but there are a whole lot of things that do happen. So that is why C is absolutely the right answer. That's wonderful. Right over here, I think Pragati has got the point, right? Anukriti, yes, your answer is also right. Wonderful to see all of that. Are you ready for the next question? So here is the next one. Please try to answer it. Ashwini, I'm so sorry for that. Please, if you could mail right after this class, please do mail to hello@edutab.co.in, or you can just call 8146207241. Call to that phone number and please get it rectified today, because 2 classes are demo and later on you will be having even Manisha. Okay. Please type with the question number. I won't be able to differentiate otherwise. If possible, please do type with the question number. Yes, so if you see over here, smooth flow of capital or smooth flow of funds primarily refers to efficient movement of the funds from savers to borrowers with minimal obstacles. We can say yes, absolutely, that might be the right answer. High profits, no, we are not talking about any profits. Quick transfer of money might be, but it should happen in the right way. Government control over financial institutions, no. Continuous increase in the stock prices, that's now very related. Okay, so E is absolutely the right answer, right? So that's wonderful. I would request everyone to please answer in the group chat. That would be easier for me. Okay, please do answer in the group chat. Yes, here I can see I think Charushri has got the point this time, and over YouTube I can see Shivam has got the point. Very good. So let's move to the next one here. Which of the following is not a direct component of the financial system? What can you say? Please do let me know quickly in the chat box. These are simple questions. We'll start with simple. We'll go to level 2 as we move ahead. Okay, so I hope you all are ready for that also. If possible, please to answer with the question number. That would help me better. Okay, yes, Chetna. Okay, Chetna, please do answer in the common chat only if possible for you. Anukriti, you also. Yes, answers are right anyway. Okay. Yes, so if you see over here, which is not a direct component, obviously we have spoken about financial institutions, markets, regulatory bodies. Okay, some of the government policies might also form the part of the financial system, but what is not directly part of the financial system is the industrial production units. Okay, so I would just like to take you back here. Along with the regulatory bodies, we do have the government entities, also government policies also. Okay, so that these also actually help us in managing the system properly. Like if we take an example, if we see RBI has a inflation targeting framework. Okay, we'll talk about it as we move ahead. RBI actually targets inflation. In that, government helps RBI to fix a particular target. You must have some idea about it. So government also takes care that things are in the right direction along with the regulatory bodies. It's not just the regulatory bodies. Okay, so yes, here government policies also would be coming. So D is absolutely the right answer. That's wonderful to know. And here if I just see, I think Charushi again has got the point, and over YouTube, if I quickly have a look, Shobit, okay, Shinchan, nice name, Shetty, okay, I don't know. Here's your next question. Which of the following best describes financial institutions? Please try to answer that. Yes, Parav, everybody who's a paid student unable to join, please mail the same to, or you can call at 8146207241. I'm really sorry about that. It shouldn't happen, but yeah, please do call them and get it rectified. Yes, here if we see which best describes the financial institutions, they only regulate. They don't. The financial institutions do not regulate. Who regulates? The regulators regulate, right? So that might not be right. Then they connect savers, borrowers, and provide financial services. They deal with international trade, limited to stock exchanges. They only issue currencies. This is absolutely not correct. This is also limiting their role. So we can very clearly say the correct answer over here is B. Okay. So yes, I think here we have Tanvi over YouTube and Anish over here answering first. That's wonderful. Here's the last question. What is the primary role of regulatory bodies in a financial system? Please tell me. That's also quite an easy question. Charu is so quick. Wonderful. Yeah, and here we have ambition, dream, I think answering first. Yes. So C is absolutely the right answer. They ensure stability, transparency, and protecting the consumers. Might not be limited to maximizing profits to banks. That might be some of the things, but yeah, but that is not the regulators are not limited to that. They are not concerned about that. They are concerned about the entire system. Okay, issuing loans, no. Controlling industrial production, managing foreign trade. So it's very obvious that C is the right answer over here. Okay, so that was the first part. Now we're moving towards the next part, wherein we'll see the characteristics of the financial system. Now we'll go a little quick because we already have an idea of what the financial system is. Quickly we can understand what the characteristics are. The first characteristic shown over here is intermediation. Okay, so what this intermediation is, you must be already having an idea. Intermediaries are those who connect two entities. Okay, like you want to buy the shares. This person wants to buy the share, so in that case he has to connect himself to the stock markets, right? So who will connect that particular person to the stock market? There would be Grow app that would connect that person. There is someone who wants to buy a insurance policy, so who is going to help in buying the insurance policy from LIC? There would be a LIC agent, isn't it? So these intermediaries actually help in connecting two entities, right? So that's a very important role, very important characteristic. So intermediation is wherein, for example, taking wherein people do have money, they want to invest that particular, or they want to deposit that money, that would be done by the that would be they want to invest it, let's say, taking that thing into consideration, then brokers will help them how to invest. Okay, so that is the intermediation part. Then talking about diversification, wherein whenever you are wanting to put your money at a particular single place, let's say you have put all of your money in the bank, what is going to happen? Let's say the banking system or the bank itself somehow fails, or it has some issue, then what would be your position? You have put all your money in the bank, right? So it is really important to not concentrate all of your money. It is good to diversify the money. So to diversify, you should have some options ready, isn't it? Like if you want to put the money in the bank, okay, I have put some money in the FD, but the rest of the money I want to invest in shares, but remaining money I do want to invest in bonds also, and some part of the money I do want to take some insurance policy too. Okay, so in this way what are we doing is we are putting our money at different places, so that whenever, let's say, the banking system has any issues, in that case your money is safe in the other avenues. Okay, so that is called diversification. For diversification you should have the options. Who's giving the options over here? The options are being given by the financial system. So that is one another characteristic. Okay, apart from that, there is liquidity, which means whenever you need a loan, there are various options from where you can take the loan. Okay, liquidity is like the flow of money is actually happening, the transactions are actually happening in a very quick manner. If you want to sell something, let's say you want to sell some shares in the market, there's always a buyer available to buy that particular share, so that's called liquidity. Okay, so what do you think? Liquidity would be higher if we have more number of buyers and sellers, or it would be lower if you have more number of buyers and sellers? If there are more number of buyers and sellers, what would happen to liquidity? From what I have explained to you, yes, many of you are very properly able to understand. there are so many buyers and sellers. Whenever you are wanting to sell some shares, some bonds, some or the other person is ready to buy it. That will happen only when there are more number of buyers and sellers in the particular market, isn't it? So that's called liquidity. Liquidity mainly relates to having more entities, like more buyers and sellers in the market. Now talking about capital formation. Okay, so what happens is different companies, they take loan, right? We'll talk about these in detail. I'm just giving you an overview now. The different companies do take loan, and when they take this loan, what do they do with that loan? They invest in their particular sorry, invest in their particular company, in the activities that they are doing, invest in the expansion of their company. And with that expansion, what is going to happen? Yeah, sure, Ankita, sorry, I will explain that, right? What is going to happen with that? They will get profit, isn't it? So if they have invested 10,000 rupees, what they might be getting back from the market is 20,000, let's say. Okay, 10,000 is what they have invested. What is the profit here? The other 10,000 is actually the profit. So capital is forming or not? Money is forming or not? Money is getting increased or not? Okay, so that is called the capital formation. Okay, so don't worry which part you can ask me, Dirg. Right, liquidity, I just said that if you are wanting to sell some shares, if you are wanting to sell some bonds, if you are wanting to take some loan for that sake, let's say, so some or the other bank is ready to give you the loan. Okay, they come behind you to give the loan, isn't it? In the same way, if you want to sell some shares, some or the other person is ready to buy those shares. Liquidity means पानी की तरह flow हो रहा है. The funds are flowing very quickly. The shares are moving very quickly. The instruments are moving very quickly. That is called liquidity. Is that clear now? Ankita, is it clear? Okay, so there you can ask me which part you didn't understand. I'll explain again. Don't worry, we'll talk about it through examples. So capital formation is like whenever you have invested some money, it grows, right? You get some profits, and the money that you had actually grows. Okay, 10,000 invested, you have 20,000 coming back, so 10,000 is the profit. So some capital is formed on your part, okay, because of your activity. So that is called capital formation. So we'll talk about that also in detail. There's also innovation over here. You have seen this UPI coming in, you have seen different apps coming in which help you in investing in the companies, isn't it? They give you whole sort of analysis also. Okay, so all of this has happened because of what? The innovative efforts of the financial system and different entities over here. And finally there is regulation and oversight, which we have already seen. Let's have a look at them properly over here. Let's say Neil wants to invest, okay, so then he will be actually approaching some online apps like Grow, Abzero, all of these you already told me. Previously there used to be these brokers, like Selvin is a broker, okay, so here this broker actually would help in help Neil to invest all of the money. Apart from that, that is something wherein we can say this broker or these online apps are actually providing the entire setup with respect to Neil getting connected to the stock market, right? So that's called the intermediation. You can see all these people are on a particular bridge. So intermediation actually acts like a bridge. Bridge, what does bridge do? It connects two places, that place and the other place which would be on the other side of the bridge. So it connects these two places. So bridge, these intermediation characteristic forms, it's like financial system forms a bridge between people who have access to funds and who needs funds. Okay, we have seen this already. Like Rita wanted to deposit money, so here we had this financial institution which would actually take up that money, and then the loan is given to Rishi. Apart from that, we do have the diversification function, wherein if you are putting your money in different places, that is going to benefit, because if one of the entities is not able to work properly, like you have put your money in bank but the bank is let's say not functioning well, so in that case your money is safe in other avenues, in the share market or in the bond market or in the money market. Okay, it is safe. So that is the variety of investment options that you have is something which is diversification. This actually reduces the risk. Doesn't that reduce the risk? Isn't it? It reduces the risk by spreading your money into different assets. Okay, so that is something, that is the role of diversification, the role, or we can say the characteristic of the financial system. Is that clear? Okay, any doubt you can please keep asking me. Harshad Mehta. Okay, yes. So liquidity, you can see this water flowing over here, right? How properly it is flowing, right, between the city. So yes, that's what liquidity is all about. You can see BSE, NSE over here. Okay, so what these actual these stock exchanges do is they connect these various buyers and sellers. They help in forming the market, okay, for the different instruments. So liquidity function actually means financial system plays crucial role ensuring that individuals, businesses, institutions, they have the access to the cash that they need when they need it. Okay, whenever you need, you have the access of the money. Whenever you need a home loan, banks, those people will come to your home and give you loan. Okay, so they are very much ready. Insurance agents, policy agents, they do come to your home and issue the policies, right? So they are all ready to help you with that because because of the liquidity function. Okay, so yes, that is what is the thing wherein liquidity is mainly about the funds getting transacted very quickly, and also this would happen when the number of buyers and sellers are more. Two things, is that clear? Talking about capital formation, you have seen these very big buildings getting built, okay, in different parts of the country, wherever you are, right? So all of these new expansions actually happen so as to gain more profit. Okay, so that's what capital formation is all about. Involves a conversion of savings into investments. Whatever you have saved, let's say there is a company which has some savings, so it will invest that money and then it will expand. With that, what is going to happen? Contribute to expansion. Okay, expansion of what? It can be some industries, it can be the infrastructure or productive capacities. Okay. Industries, already we know, right? Factories, let's say, are building new and new branches of that factory, then the industries are actually expanding. Infrastructure, all kinds of infrastructure, buildings, roads, all of these get expanded and they do help in gaining more and more profit from the financial and economic activities. Okay, I would request, please don't write on the screen. Now productive capacities. Okay, so whatever capacity, people have some skills, so that skill set, if it improves, a person who is able to help in production of 10 products, let's say, if the skill set of the person actually improves, then he would be able to help with production of 12 items, let's say. Okay, in the same way, productive capacity of a machine might be improving. So we are investing in all of these and then the productive capacities are improving. So that's what is all about the capital formation. Now talking about capital formation, so if let's say Rishi has a doubt over here, so is capital formation same as flow of funds? What is happening in capital formation? You are investing some money and then that money is again helping you gain some profit. Okay, so here also some flow of fund is happening. So can we equate capital formation and flow of fund? That is a doubt that Rishi has. So here Professor Vinay is actually telling, well, capital formation is closely related, but they are not the same concept. Okay, so let's try to understand. Here what is happening, Rita has deposited some money in the bank. Okay, is that a flow of fund? Let me ask all of you. You can just type Y or yes or no N in the chat box very quickly. Yes, it's a flow of fund, isn't it? You can just type Y. Then that money is reaching Rishi in the form of an education loan. Is that a flow of fund? Is that actually movement of the money, or is it a transaction happening over here? Yes, right? That money could be given by the bank so as to establish some infrastructure also. Okay, so as to establish, let's say, railway track or a building has been established, right? For that also bank can give the loan, right? So in that case, what is going to happen with Rishi? What is going to happen? Rishi is actually studying, and then it might take a lot of time for him to be productive and then give his contribution to the economy. But now immediate contribution is given by the bank, providing the money for infrastructure development. Okay, and we can expect profits coming very quickly. Okay, let's say the small railway track was to be repaired or built or something, and that has been done, and immediately the trains will start moving over that railway track and the profits would start coming in with the movement of the, say, goods, passengers, all of that, right? So infrastructure investment actually helps in quick profits coming out. Okay, so this is also a type of flow of fund. This is also a flow of fund only. Both of them come under flow of fund. Yes, for sure. But which out of these two, let's say this is A, let's say this is B, which out of A and B is actually something which we can say very closely capital formation? Can you just tell me out of A and B, which is capital formation over here? Yes, so it is A, isn't it? So capital formation in this way is a part of flow of fund. Okay, funds flow can happen in different ways, right? But if it is being invested in such a manner that it is helping in productive activities and there is some profit being generated at the end, so that is called capital formation. Is that very clear? Is the concept of capital formation very clear? Did we also understand that it is a part of flow of funds? Okay, is it clear? Yes, it is. We cannot say capital formation is happening over here because there's no immediate profits being generated. Okay, but this is profits being generated immediately. Okay, can we say that flow of fund facilitate capital formation? Yes, flow of funds do facilitate capital formation. So it's a part of it. Like we have different initiatives, like through Make in India, we are trying to come up with making new other different industries are being invited into India. Okay, foreign industries and all, and they are being invited, and with that capital formation will definitely happen. Now moving ahead, we can talk about innovation. Okay, is that very clear to everyone? We'll talk about innovation. The best example is UPI, wherein we have seen that previously we used to hold a lot of cash. Now we don't know how much cash we do have in our pockets. We just use the UPI, isn't it? So UPI is a very good we can say innovative initiative of the financial system itself. Advances in technology lead to creation of new financial products and services, enhancing efficiency and accessibility. Now people are actually all the different entities, even the government is making use of the artificial intelligence so as to provide more services. So that's another innovation, that's a disruptive technology that's being used. Now finally we have our superheroes, which are the regulators and the oversight, which are the important characteristics of this particular financial system. Okay, so the central bank, security regulators, insurance regulators, they play a very important role, as we have seen, in smooth functioning of the financial system. By what? Do you remember the four functions that we have already seen? The first one is governing and overseeing the financial activities. We have said that is the first and foremost primary function, right? Regulation over here, that is governing, and overseeing is the supervision function. Then talking about the they do set the rules, regulations and standards. Yeah. Yeah, at the end of the session I'll give you the PPT, right? Safeguard, you please do take the PPT and then only leave the session, don't leave like that. Safeguard the consumer interest, how DICGC example we have seen. And finally it promotes transparency, protects the consumers. Is that very clear? Are we ready for the next round of Lord Narasimha rapid fire? Okay. Yeah, if we talk about innovation, some of you are asking. So innovation is nothing but wherein new financial products are created. Okay, new financial services are provided using the technology. Like UPI, previously you used to give all the money, pay everything with cash. Right now we are able to just scan a code and then you are able to pay for the particular thing. Okay, so that's usage of technology. With that, new financial product has been given out, new kind of service is being provided, and the flow of funds, transactions are becoming easier, simpler. Why do we use technology? To complicate things? No, to make things easier. So things become easier. It enhances the efficiency and the accessibility of these things. Okay, so we do have things for the blind also. Many times we have seen the news. Okay, even RBI has come up with that. So yes, okay, yes, CBDC is also a very good example. Ayush, wonderful, that's right. Okay, is that clear now? Mine 023. Okay, is it clear? So let's move for the next round. This will be really rapid, so quickly please do answer these questions. I'll keep moving very quick. So here is your first question, please try to answer it. Yes, Amisha, still it will be capital formation only, because the profit might not come immediately, but it definitely does come. Okay. Yes, unified lending system, digital rupee, Vikrant, absolutely right. So yes. Are we answering? Okay. Yes, Nikunj is asking, even education loan has some profit. Yes, it does have. It comes after a lot of time. Okay. or we can say not immediate, not for the entire economy as such or to a large part of the economy. So we just call it to be a proper flow of fund at the beginning. Is that fine, Nikunj? So here if we see, intermediation in a financial system primarily involves what? Intermediation means what? To channelize, let's say, funds from the savers to borrowers. Okay, direct lending, no. Transfer of goods, no. Increasing tax revenues, currency printing, not at all. All of this is absolutely the right answer. Anish, Charushri, Vartika have properly answered first. Wonderful to see that. And apart from that, over YouTube if we see, we have ambition, dream, Ritik, Tanvi on the top. Okay, so let's move ahead. Here is your second question. Which of the following portfolios is most diversified? It's very, very simple, right? Just to give you an idea of the term diversification, just to take you through the practicality. Yes, Anukriti, I'll explain through this example over here. Okay, this question itself is the best example of diversification. Yeah, I hope it is clear. Now, yes, if you talk about diversification, you have some money. That money is being invested in the stocks, okay, shares. You have put some a part of it. Let's say it's 1 lakh rupees. You have put 10,000 in stocks. You have put 20,000 in stocks. Then let's say around 40,000. How much that is? Okay, 70. So 30,000. Let's say in the real estate sector. Okay, you have put your money in different places. So diversifying your different sources of income. Okay, so what you have done, put your 1 lakh rupees in different avenues. So that is called diversification. Like you want to eat ice cream. So many people are just fine with, okay, if you give me vanilla flavor, that's fine. Many people want a scoop of vanilla, they want a scoop of the strawberry, they also want pista, right? So that is like diversifying your options. So in that way, that is called diversification. So how will that happen? Only if the shopkeeper has those different flavors, only then you will be able to buy the ice cream and have those scoops, isn't it? In the same way here also, if in the financial system, if only if the options are there, you will be able to invest your money at different avenues. So that options are being given by the financial system. So it's a characteristic. So is that clear? Anukriti. Yes, Anish, Pragati, Yamni have answered first this time. So that's wonderful. Over YouTube, if we see very quickly, we can see that Shivam, Ambition, Dream, Nirmita, very good. Okay. And even Amisha has answered. Correct. This is the third question. Please answer it. Okay. Thank you, Nikunj. Anukriti, I hope it is clear. Which of the following institutions is most associated with providing high liquidity in India? So I showed you while talking about liquidity, I showed you the picture also. So I think it should be clear with that. So insurance companies, they do provide this liquidity. Real estate market, fine. Pension funds, gold storage firms, yes, they do provide liquidity, but the highest liquidity is there in the stock exchanges. Okay, so Bombay Stock Exchange, National Stock Exchange are the best examples for providing liquidity. So C is absolutely right. Here we have Daksh, Saurav and Charushri answering first. Even Vartika's answer is correct, and all others, right? Whoever answers C, that is absolutely right. Over YouTube we have Ambition, Dream, Tanvi, Shivam, Dhruvit Chauhan also answering right. Okay, so that was your characteristics. Now quickly moving to the role and importance. Now that we know the characteristics, we know the role and importance, isn't it? We'll quickly cover it. So talking about, we'll connect the role and importance to the characteristics and try to understand. Okay, intermediation, here if we see how is the financial system actually helping us. So intermediation itself is the role and importance of the financial system, wherein it is helping you to connect to the particular market, okay, wherever you want to invest, isn't it? These intermediaries like the brokers and all help you to connect, isn't it? You directly cannot approach the stock exchange, let's say, so intermediaries help you in doing that. So that is the role and importance itself. They also help in allocating the resources in the proper manner. Let us say there is a broker who can help you with investing in the stocks. Okay, so stocks are generally high risk. But if there is someone who wants to take low risk, okay, they don't want to take a lot of risk, then they will invest in bonds. Okay, so in the same way, these broker who is helping you to invest your money, he can, if you are like, I want to gain more profit but I can take some risk, so you can invest in the shares or stocks. So if you are a person who would say, I don't want to go into a lot of risk, but I just want to invest my money in a safer avenue, so he will say, okay, you can go for the bonds. Okay, you must have seen those ads over YouTube wherein very safe and all of these things are something that they give out, and they're saying you can invest in the bonds. Okay, that is the thing. So resources are also allocated in the proper manner. Because of this characteristic of the financial system, this is the role that it plays. Now talking about diversification, we very clearly saw that your risk is being managed, isn't it? When you're investing in different avenues, let's say shares, bonds, you're investing in the FD also. FD is very safe wherein your money is there. But let's say at a time wherein the bank where you have invested is unable to function properly. In that case, your money is safely placed in the shares. It is safely placed in the bond market, isn't it? So your risk is managed because of this function of the characteristic of diversification. Is that very clear? Now talking about liquidity, here also your risk is being managed. Let us say you are holding some share and you want to sell it, but there's nobody who is wanting to buy it. So that is a risky situation, isn't it? The prices might change and you might not be able to sell it later on. It might be very giving you loss if you sell it later on. So you have to sell it at the right time in the right way. Okay, so that is being ensured because of the liquidity function. You want to sell these shares, somebody is there to buy it. Okay, so that is the liquidity function wherein the risk is again managed. Is that very clear? If anybody has any doubt, you can please keep asking in the chat box, right? Okay, so the risk is managed here also because liquidity actually helps in properly taking your whatever investment you have done and gaining from it. Okay, like you want to sell something, or let's say in a situation, let's say during the COVID time, many MSMEs wanted loans. So who helped? The banks helped. Different banks could give the loan. Even their situation was not good, they could give the loan because there were so many banks available. So that is a liquidity function, okay, wherein so many options are available and the flow of money happens very quickly, just like water. Whenever you think about liquidity, think of water. If you have seen water moving in a very drastic manner nowadays. But yeah, which one, diversification or is it resource allocation that you are asking me, Chetna? You can tell me. Now talking about capital formation itself is a role and function, isn't it? Because here what is happening, you are gaining profits from the financial system, so obviously that is itself a role, and that helps in the growth of the nation. Okay, Chetna, can you please tell me, can you be specific? I will explain for sure. So growth of the nation, isn't it? So when you are getting profit, the company is growing, the sector is growing, the nation is growing, isn't it? As far in the economic terms, we can say that. Is that very clear? Yes. Resource allocation is wherein the the intermediaries actually help in properly allocating the money. Okay, let's say, as I said, let's say you just want to invest the money in a very safe place. So where will you invest that money? Where will you put that money? Let's say in the FD of the bank. Okay, that is a very safe place. Or if you want to invest in the bonds but in a very safe manner, okay, that would be a government bond that you would be investing in. Okay, so there's a lot of security with the government bond, right? In that manner, that is very safe. So resources are being allocated in the right way. Okay, right manner, in the from the right person or entity to the right entity. That is what is resource allocation. Okay, properly channelizing the money, that is what is the resource allocation. Is that very clear? Yes, I will try, Sonali. I cannot promise. Okay, Niharika, liquidity part, how it is risky? Yes, liquidity part helps you in risk management because let's say you need, like I said, MSMEs. I gave you the example of MSMEs. Let's take a personal example. Let's say there is person X who has some emergency situation. He needs some money. Whom will he approach? Let's say he approaches a bank, right? They deny because your credit score is not good, we are not going to give, right? He goes to some other bank, they might give the money. So when he is having other option, only then he went to the other bank and then they are able to provide the money. That option is created. Okay, so that is liquidity. Liquidity means more number of sellers, more number of buyers, more number of entities, isn't it? Then only the movement of money will happen very quickly. So that is what I want to tell you, that you had a risk, you need money in emergency, you couldn't get it from anywhere, so some or the other entity will definitely give you that money. Is that very clear? Because so many buyers, sellers, so many entities are available. Niharika, is it fine? Is it clear? Now talking about the next part, we have innovation wherein entrepreneurship is promoted, right? When startups are given loans, only then the startups would be able to go ahead and carry out their entrepreneur activities, isn't it? They would be they would be actually converting their idea into a product and scaling it up. Okay, then only they will be taking it to the market, people would be buying it. That is what is entrepreneurship all about. How is that happening? Because of the various innovative efforts that are being taken. Okay, there are we just spoke about UPI. There are other efforts of the financial system wherein the startups are actually provided loans. They are also helped with respect to what you should do so as to promote your product. Okay, so these are called incubators. Okay, so these functions are also there of the financial system which do help. There is also this payment mechanism, right? The payment mechanism is promoted. That is a direct example of innovation. We said UPI is an innovative initiative. Yes, so payment mechanism is promoted through that, isn't it? That is a role that through which you can actually pay very quickly, pay very conveniently. Okay, so UPI gives you a very convenient way of paying for different things that you want to pay for. Okay, Nidhi, is it clear? Risk management part, is it clear now? Yeah. So last one is regulation and oversight, which we have already seen, right? Repeatedly we have seen that. I hope there is no doubt at that particular part. Okay, so I hope things are clear. All these seven role and importance you have understood. Also you have understood what this particular characteristics of the financial system, six characteristics of the financial system are: resource management and diversification. Resource allocation is like, it's not same, it is like what you want actually. You are able to buy that. Okay, proper resource allocation. Like now you want something wherein you want to invest in a very risky avenue and you want to gain more profit, so that is available for you. That option is available. Diversification is keeping your money here at different places so that you do not fall into any risk, right? So that is the thing. Is that clear? Mine 023, is it clear now? Please tell me in the chat box. And here is your Lord Nasimha rapid fire round. Are you ready for this? Here is your first question. Please try to answer it. Okay, Sneha. Yes, real estate investment trusts are there. We will talk about those, Amit. Right, so they are also financial. So talking about resource allocation, see if you are able to answer this, you have understood, right? Many of you were asking about this. Mine 023, please try to answer this question. So resource allocation by the financial system ensures what? Equal income distribution, funds flow to low risk projects only, efficient use of funds in high potential ventures, reduction in taxation, okay, elimination of unemployment. Okay, so what does that actually mean? So talking about resource allocation, it should be happening in a way that the funds are moving efficiently and also moving in the high potential ventures. Okay, who actually needs them very badly? Someone who is actually provided, right? Who needs which kind of particular instrument to be bought, where he wants his money to be invested, there it is in getting invested in an efficient manner. That is resource allocation. Okay, is that very clearly understood? So I think here Daksh, Saurav, Riya have been able to answer. First Shivam, Tanvi and Ambition Dream over here on YouTube. I think C is right, and you all have been able to understand why it is right. Yes, Sunny, your answer is also right. Now moving ahead with the next question. Capital formation differs from mere savings. Why does it differ from mere saving? How are you answering before the question is coming on the screen? Okay, please see this. Capital formation differs from mere savings because it focuses only on cash holding, converts savings into productive investments, eliminates financial risk, increases consumption, avoids long-term projects. Okay. So yes, here if you see, capital formation means invest somewhere, get some profit. That is what is productive investment. Okay, so very clearly we can understand the answer to this is B, and here Daksh, Saurav, Vartika, Charushi absolutely have answered right. And quick, and talking about YouTube, we have Nimita, Ambition Dream, Simran. Okay, that was with respect to the role. Now talking about the difference between financial system and markets, if we see here, Professor Vinay is actually explaining the students how these two are different. So financial system is like the entire city. They are in Nivesh Nagar, and he's saying it's like the entire city of Nivesh Nagar is like the financial system, while financial market are a small region within that particular city. Okay, so financial markets are a part of the financial system. Okay, that is the main thing. So if we talk about financials, we have seen that, isn't it? On the first slide also we have seen, but many a times we do get confused. That is why we have included this part. Financial system is entire thing wherein we have the institutions are also there. There are these intermediaries, right? There are the instruments, there are the markets themselves, there are the regulators. All of these are part of the financial system, but one part of the financial system is the financial market. Okay, so we cannot interchangeably use both of these terms. Many times we do use the terms interchangeably. That is not exactly right, because financial markets are actually a part of the financial system. That is what I just want to tell you. That is the basic difference between them. Now talking finally about the Indian financial market, right? So how did it all begin? That is a doubt that Rishi has over here. Let's go ahead and have a look at that. So it all started with the traditional financial transactions, wherein what is this traditional financial transaction that is happening over here? Can anyone tell me? Okay, you can see two something happening over here. Yes, absolutely right. Saurav, Vartika, Pragati, barter system is absolutely the so sorry. Yeah, so barter system is something with which the transactions actually started. Now moving ahead, we can say in 1770 the first bank in India was established. It was called the Bank of Hindustan. Okay, apart from that we move ahead, and the first I would say in the entire Asia, the first stock exchange that was established was the Bombay Stock Exchange in 1875, long back. Okay, now apart from that, RBI came into being in 1935. Okay, so this when RBI came into being, do you know, because we are preparing for RBI, we should have special knowledge on that. Please do not write on the screen, I would just request everyone. So yeah, when RBI came into being, was it a totally public entity, I mean the government entity, or was it established as a private entity initially? Okay, if you have an idea on that. Yes, absolutely, you should know this, that RBI was actually established as a private entity at that time. Okay, even right at the time of the when Britishers were over here, before our independence, before 1947 this thing happened. In 1935 it was established, but yeah, later on it was converted into a public entity. That is a requirement. Do you have idea? Yes, Ria, absolutely right. It was converted into a public entity totally. The government took up the charge, okay, took up the entire stake in 1949. Absolutely, if we say. Now talking about other entities, we have this IDBI, UTI. Okay, these are the different other entities that have been established. Industrial Development Bank of India, right? Previously this was established as a development financial institution. Do you have idea on what this development financial institutions are? Generally, if you ask a bank, I need a loan for 10 years, they will deny, because that is something that they are unable to handle. What the bank has to do, the bank has to the banks take the deposits for short term, like you have an FD. Mostly people do the FD for 1 year. After 1 year the bank has to return that money to that particular person with interest. But if the bank is actually putting its money in a long term loan, right, the bank would not be able to get the money right within 1 year. See, the tenure here is 1 year. Let's say here the bank has given the money out in a loan for let's say 10 years. Okay, so the money that has been given as part of the loan will come back after 10 years, isn't it? During this period of time, the bank will not be able to return over the deposits. Okay, the liquid money that it requires is not available with the bank. So banks generally do not give this long term loans. Okay, but for development of the infrastructure we need long term loans, isn't it? So how can we say that if you want to construct a particular metro rail or track or station or platform, you need a lot of money being spent over years, 5 years, 10 years for that sake, isn't it? So infrastructure development needs long term loans. Who will fill this gap? Banks are not giving the loan because of the issue that they have. So the gap was filled by these institutions called the development financial institutions. Okay, initially IDBI was established as a development financial institution, giving away loans to the industries in this manner for long term. But later on it was converted into bank, as you know, now it is a bank. Now UTI was established in the mutual fund sector, okay, Unit Trust of India, and yeah, we won't go so deep into it, but yeah, UTI was the first government related entity which was established in the mutual fund sector. Now SEBI was established in 1988 to regulate the stock exchanges, to regulate the different these stock markets, right? So it is the Securities and Exchanges Board of India. Then later on we allowed commercial papers, which are a very important instrument, right, in 1990. Specifically, if I just give you a small idea of what these commercial papers are, they are like instruments wherein companies would be issuing them for short term to gain some money, right? People buy the commercial paper and then later on some profit is given to them. Yes, short term instrument, okay, for short term. What is short term? Whenever I say short term, as we move ahead, I am just talking about a time which is less than or equal to 1 year. Please remember that. And whenever I say long term, I'm talking about tenure which is greater than 1 year. Okay, I'll keep repeating it again and again, so no problem, we'll revise it. NSE came in 1992, the National Stock Exchange, and later on derivatives were allowed in 2000. So derivatives is a total another discussion, so we'll do that later on. Okay, so those are the different we can say the timeline with respect to the development of the Indian financial market. We'll be talking about the different components of the Indian financial market, including the bond market, okay, wherein bonds, which are a safe kind of investment, because bonds are those instruments wherein if you give your money, there is a guaranteed return, or there is a fixed amount of money that you are going to get back. Let us say you have invested 100 rupees at 10%, right? So what is the final money that amount that you are going to get back? Can you just try to answer this question? Yes, absolutely, it will be 110 rupees. 100 rupees plus the 10% interest of 100 is 10 rupees. So you will be getting back 110. So this is the fixed amount of money that you will get back. So bonds are slightly safe in that manner. Okay, I would like you to compare that with the stock market, wherein you have invested 100 rupees, but you do not know what is the percentage of profit that you are going to get. It might be zero also. It might be sometimes negative also. Okay, it might be positive too. So that is what stock market is all about. It can be 20% also, okay, which is much higher than the bond that you are going to get. Okay, I'm just comparing it in terms of the profit that you are going to get. Of course, there are so many characteristics which we'll talk about. There is an entire chapter on the equity or the stock market. There is an entire chapter on the bond market. Okay, so that is the thing. So here you are uncertain about the thing. So that is why it is slightly higher in risk. Okay, so this is a different kind of avenue wherein you can put your money. Now there is another avenue wherein you can put your money in the forex market also. Okay, forex market is nothing but the foreign exchange market. See how people actually invest in this market. I'm just giving you an idea so as to relate with the same example. Let us say today $1 is 100 rupees. But as you see, the dollar's rate in comparison to rupees actually increasing. The value is actually increasing. Let's say tomorrow the $1 is 150. So you buy at 100. Tomorrow you sell $1. What is going to happen? You are going to gain 50 rupees out of this transaction. Can you see? Isn't it? So that is how people do invest in this particular market also. Apart from that, it serves so many purposes, which we'll see as we move ahead. There's also this debt market. Okay. It is also called the money market. Okay, so at this particular point, if we talk about money market, here what is going to happen is people take something called loans. They do borrow, right? Here loans are being taken and borrowing is being done as far as the debt market is concerned. Okay, and if we talk about money market, this is happening for the short period of time. Okay, short term, again, if I say it is less than or equal to 1 year. Okay, then we have something called primary and secondary markets, right? If I take an example, RBI issues, do you know, government bonds. I spoke about bonds, they are safe. Government bonds are much more safe, okay, because of course they are given out with the security of the government. So on behalf of Government of India, RBI will be issuing this government bonds, and this issuing of the government bonds actually is something wherein RBI provides these government bonds into the market. Who is going to buy these bonds? Mainly these are bought by some banks, right? Some financial institutions. Even people can buy. People like you and me, who are called the retail investors, they can also buy. Okay. But essentially they are bought by these banks and other financial institutions who are established. Now they will be taking these government bonds and selling to different investors. Okay, investor 1, investor 2, investor 3, right? This is how the bonds would be flowing into the market. Now this issue has happened primarily by the RBI. So this particular part is called the primary market. Okay, now tell me what would be the other part be called. Okay, from here it is being issued to other investors also. Obviously if this is called the primary market, yes, absolutely, the other part would be called the secondary market. Okay, so this is the basic concept. This can happen with respect to bonds, it can happen with shares, right? Different instruments. So we'll be talking about all of them as part of the primary and secondary market. We'll talk about the Indian banking sector, which you are very well aware about, various Indian financial institutions, and the non-banking system, which I already explained about. Okay, so all of these are the main components of the Indian financial system. And on that note, we have actually completed discussion on this particular chapter. Let's move through the Lord Narasimha rapid fire round. Here is the first question. Really rapidly you will have to answer it. Which of the following is not the part of the Indian financial system? Okay. We cannot say a major part, although this is also a part, but we cannot call it as an exclusive major part of the particular market. Okay. Sarita will discuss about difference between treasury bills, government bonds later on. I'm just giving you an idea. Thomas will talk about it. Okay, it's like government bonds a broad category. In that, one part is treasury bill. Yes, if we talk about this particular question, lottery market is actually not part of it. Okay, I gave you a hint also as I was talking about. Pragati, Charushri, Tomya, Priyadarshini, all of you are absolutely right. Parav, Shiva, Ambition, Dream, Dhruvit are absolutely correct, and all others too. Everybody has answered it absolutely correctly, so D is the right answer. Moving ahead, if we talk about in the context of financial market, BSE was established when? Many a time they do ask such silly questions also. You should be really ready with the answer for them too. We have discussed it explicitly, so can you just answer this particular question? Okay. Okay, there's a confusion between B, C, A. Why are some of you confused? Of course, remembering year is slightly difficult. Yes, Tanu, your answer is right, and A, B, C, D also people have answered E also. Okay, so here if we see, BSE was established in 1875. It's just a fact, so obviously we'll have to remember in 1875 it was established. So I think here Pragati has answered right. Apart from that, yes, Raj, Priyadarshini. So that was your first chapter. Okay, so what we will do is we'll quickly move into the second chapter. We'll just take 2-3 minutes of break, right, and then we will move into the second chapter. Okay, just a 2-3 minutes break, and then we'll quickly you have to quickly join back. Okay. Okay, so shall we restart? So here is the second chapter, the time value of money. We'll first of all try to understand what this time value of money is. Let me tell you, the knowledge of time value of money, this particular chapter is going to help you in understanding whole lot of concepts as we move ahead. Specifically in chapters like bonds. Okay, so it is a very basic concept. So we will try to understand that quickly over here, and then we might not be able to complete the entire chapter, but we'll try how much ever we are able to complete, and then we'll move into the next part tomorrow. Yes, mine 023, I can see resource allocation basically means key we have different options, and diversification means we are investing money in those options. Yeah. Mine, so resource allocation, just see the terms. Resource, okay, allocation. Yes, you are right in saying there are different options. So who's going to help you in actually getting access to those different options? Who's going to help you in letting you know? Let's say you need an insurance policy, but someone is saying go and invest in shares. Would you do that? Mine 023. You need an insurance policy, but someone is saying go and invest in the shares. Would you do that? And others also you can answer. I hope everybody has joined. No, Divya is saying no, Soumya is saying no. Obviously we won't do that. So it has to be properly allocated. Okay, you need the insurance policy, then yes, your money has to go into the insurance company, then you will get insurance policy. That is called proper allocation, proper resource allocation. So for that there is requirement of different options. You should have the option of investing in the insurance company, isn't it? Then only you will be able to invest. So in that manner it is right. So that is basically, don't get confused, allocating the resources in the proper way, allocating your money in the proper sector. That is what resource allocation is all about. Yes, for that different options are required. Diversification means you are actually able to invest in those particular options. I would request all of those people who are over here on YouTube, right, who are part of the paid batch, please do join over Zoom. Please try to join the over Zoom again, right? I think they have there was some issue. Now the limit has been increased. Can you please try to join over Zoom, and please do let me know, are you able to do so? Okay. Yes, okay, thank you so much. Mine 023, is it fine? I have explained it. Did you understand? So we'll be talking about time value of money now. Okay, so we know what money is. Now what can we say is the time value of money? Okay, we'll be talking about money. Yes, we do know till here that yes, money has some value, isn't it? Definitely you can buy things. There is some value that money actually has. But what is meant by time value of money? We'll be talking about that. There are two meanings that we'll be going through. Okay, not able to yet. Okay, yes, please do keep letting me know, are you able to join over here, right, in this session over Zoom. The link that you have as far as the course is concerned, please try to join from there. Okay, so what would be the agenda as far as this particular thing is concerned? So first of all, we'll be talking about the meaning of this term. Okay, first, whenever we are studying something, we should know why are we studying it and what is the main. We will be able to understand why are we studying only when we know the right meaning of it. Okay, so we'll talk about this time value of money, what it exactly means. Here, what is going to happen is we are basically entering into the core terms and the core things as far as the finance is concerned. What is finance all about mainly? Okay, for an individual like you, what is finance all about? If I just ask you, can you just tell me what is finance all about? If I just ask you as an individual, or let me frame it in a different manner. If I just ask you, how is the knowledge of this subject finance going to help you? You should know that, no? Are sir exam ke liye padhna hai to hum baith ke, no? You should know why. How is it going to help you out as far as yes, I think I can relate more with Charu's answer. Charu saying investment, profits. Yes, managing money too. Amisha, absolutely right. Okay. No capacity. Okay, okay. I'm sorry about that. You can please mail or call again once to the support team. Okay. So the number is displayed over here on the screen at the bottom. I think it is not visible. 8146. 207241. You can call off to the class, right? Yes, what is finance actually about? Mainly for us it is about a whole lot of things, but for us it is mainly about investing, isn't it? So time value of money, our journey with respect to investing is starting here. Okay, so let us quickly move ahead and have a look at what this concept actually is. Yes, okay, unable to join. I'm so sorry for that. So we'll try to fix it, and apologies from my side. You can keep yourself over here on YouTube, right? Actually we have done the change, but I think it is not getting reflected yet, so sorry for that. Okay, yes, you can be connected over YouTube, and please call over that number or mail and tell them that you have the issue. Now what is the agenda? We'll talk about time value of money and start our investment journey over here. Okay, can join. Okay, Yuvraj, thank you so much. Techniques of this time value of money, we'll talk about different techniques. Over here we'll also talk about something called annuity. So we'll talk about new terms from now, and that is going to be really interesting. We'll understand that in a very interesting manner. We'll talk about something called present and future value factors. We'll also talk about the other related concepts in this regard. Let us quickly dive into this particular concept and talk about time value of money. Let us say, take an example over here. Here we have Professor Vinay and Neil talking. So what are they talking? If your father has 10,000 rupees, what can he do with that particular money? Let's say Neil's father has 10,000 rupees, and what his father is going to do with that particular money. If I ask the same question to all of you, what are you going to do? Let's say this 10,000 is something that you have some extra money. Okay, high volume sound. Volume, is it low? Can others tell me? I think I'm shouting over here in the studio. If there's any issue in the volume, you can please tell me. Right, I think it might be from your side. You can try increasing the, it's fine, Vedi. Okay, thank you so much. You can try increasing the volume at your end, Surya. Okay, so 10,000 rupees if you have. Many of you are saying I will spend or I will invest. Tejas is saying, okay, I will invest, I will invest, I will invest. Yes, so here if we see, there might be two options. You might be spending it immediately. This is what all of you are also telling me. Either you will spend it immediately, right? So you're going to spend it immediately, or you're going to invest it, like all of you have actually answered. It's okay. Okay, thank you so much for YouTube. So spending it immediately actually gives you immediate satisfaction, isn't it? You might be buying a car, you might be buying a home, you might be traveling. Okay, you can do any of these. Of course, don't travel now, so because a whole lot is happening in throughout the world, so it's not a safe time to travel. So yes, you can spend immediately, and that might give you immediate satisfaction, isn't it? But this thing being spent, the money being spent immediately, would not have that money being available for investing, isn't it? You might also invest it. You might think, okay, why to spend it like that? Let me just invest in, like Ankita is saying, okay, I'll invest in stocks, bonds, properties, or we're saying put it into mutual funds, some money into insurance. That is really important nowadays. Having a look at the uncertainty of the weather and everything, you should have some money in the Para will buy guitar. That's wonderful. That's an idea that I too like about right? So I might also buy a guitar, right? So that is the thing. So invest it. Money grows over time, right? So because what is investment all about? Like you have invested that money, it might grow over time. Let us say you have placed 10,000 rupees for 1 year per annum. The interest given over here is 5% per annum. Okay. Now we'll start talking numbers. Okay. So please be very concentrated over here, right? Yes. If we talk about 5% per annum interest being accumulated on this particular 10,000 rupees that you have invested, how much that interest amount would be? How to calculate? So 10,000 into 5 by 100. I hope you know this. So this thing gets cancelled. It's around 500 rupees. Yes, absolutely right. So 500 rupees is the interest. Now what is the amount that you are going to get? You will get the principal. This is called a principal amount. Okay, now we'll principal. Now we'll start talking terms also. Okay, this is the principal, and this 500 rupees is actually the interest that you are gaining. Is there any doubt till here? Now adding both of those, you are going to get the final amount, isn't it? Which is, yes, absolutely, all of you are right, it is 10,500, right? So that is what you're going to get. That is what is given over here. Money grows over time, 5% per annum. If that is the thing, we can say it's 10,000 growing to 10,500. Okay, yes, not taking for now we won't take the inflation into consideration. We'll talk about just the growth of money in simple terms. If we take many things, the of course the investment might not turn out giving you the same profit, but yeah, for now we are just considering simply if we have invested 10,000, then we would be what is the amount that we're going to get. Yes, whoever is unable to join, I'm really sorry for that. You can please actually be connected over YouTube and mail after the class that you are unable to join, right? So what can we remember, what can we think about money having time value? We know money having value, but do you see that you have invested 10,000, after 1 year you are getting 10,500? Can you say that money also has some time value? It has an intrinsic value of its own. 10,000 has its own value. You can buy goods and services you can avail worth 10,000 rupees. But yeah, it does have some time value too. When you have invested it somewhere, that is one kind of a time value. This is just one kind. I'll tell you another kind also. So this is just one kind of time value that you have. Right, so you have invested it somewhere, it grows to some amount based upon the rate of interest. So yes, money does has a intrinsic value, it also has a time value. Okay, time value is like you are gaining some money, some extra money out of what money you have invested. Let's say this is one of the definitions. Out of the money that you have invested after a particular time period, only if you invest it for some particular time period you will get that money. So that is why it has a value attached to the time also, so it is called time value. Is that first definition, first part of the definition clear to everyone? Okay, let's read it out. Remember, money has time value, which means that the same amount of money today can have a different and often greater value in the future due to the interest or the investment opportunities. Is that very clear? The first part is clear. Let's move into the other part. Okay, but here the question is, Neil is asking, but no one's sure about earning profit. That's exactly right. Okay, you may not be able to earn profit. In that case, what are you going to do? Let us say I just ask you, please invest in the share market of China right now. Would you be investing? Okay, of course, no offense to any country, but yeah, they are facing a lot of difficulties. Okay, we should be with all of these countries. Of course, even India is facing a lot of difficulties, but still we are able to manage the economy. But a lot has changed in different countries. Okay, they're saying that these countries might not be able to come back. Even Europe is facing a lot of things. You might not think about investing there also. Okay, so we are not sure about earning profit. So what is the best thing to do? Tell me, what is the best thing to do if you are not sure about earning profits? You don't know where to properly invest, wherein you are going to get the profit. We would definitely, yeah, FD and all of these things are there. So we would even think about consuming that money right now. If I just say receive today, obviously yes, who has seen the future? So just spend that money right now. Why am I saying spend that money right now? Why am I not saying spend the money after 1 year? I'm saying which is more convenient to you, spend the money right now or spend that 10,000 rupees after 1 year. Which is more convenient to you to do? Tell me, option 1 or option 2. Tell me very clearly right now, isn't it? Option 1 is more convenient, option 1 is more something that you can relate with. If I suggest 10,000 rupees spent right now, that would give you a whole lot of, let's say you are able to buy one basket of fruits out of, or let's say because fruits are very costly nowadays. So yes, out of that money you are able to buy the one basket of fruits. But after 1 year, if you are just spending that 10,000 rupees, are you sure you will be able to buy that one basket of fruits? Let's say now you are able to buy 2 baskets of fruits. But after 1 year, you might not be able to buy the 2 baskets of fruits. You will just be able to buy 1 basket of fruit, let's say. So what is happening over here? The value of the money with time is also decreasing. Yes, absolutely, Mahima, because of inflation is one of the reasons of that. With time, the value of money is decreasing also. If you invest it, it increases. If you don't, it keeps decreasing. So it's up to you what you want to do. The money that you have in your bank, that you have at different places is getting eroded Do you know that? Okay, so that's time value. Understanding both of these aspects is something that is time value of money. Is that very clearly understood? Yes, present value is greater than the future value. So better having money today, use it right away. That's the best thing. If you are not certain about, of course, the environment. If you see right now, the investment environment is not that good in different countries. So receiving money 1 year from now, let us someone is saying, I'll just give you 10,000 rupees, spend it after 1 year. I'll give you 10,000 rupees later on after 1 year. They have taken 10,000 and they had to return immediately, let's say after 1 hour or 2 hours, but they're saying I'll give you after 1 year. Would you agree for that? Array, the value of the money will decrease. How am I going to accept that from you after 1 year? Okay, you're just saying you'll give 10,000, give me extra, then I'll accept. Then you will accept, otherwise you will not accept, isn't it? So receiving money after 1 year, missing, you are, what is happening over here? You might have that money right now, you can invest it right away and grow it. Apart from that, what is happening? You have given that money and that person is giving you later on. That means obviously you are losing the opportunity to grow that money. You are losing the opportunity to even spend it right away. So many issues, isn't it? So that is why money has a regressive time value also. It has a progressive time value also. Both the things. Are you able to understand? So money available today is generally considered more valuable because it provides flexibility, immediate access, and potential for growth or use in various ways. Flexibility in the sense, you know, you have different options where you can keep your money. If that's not safe, you'll keep the money in FD. Okay, in the bank, let's say. Immediate access is also something that is provided immediately. You can access the money immediately. You want to buy some laptop or something, you can buy it immediately, isn't it? And there's potential for growth, wherein how are you going to grow that money? Can anyone tell me? We have discussed right now. How are you going to grow that money? What is the term related to this particular part of this sentence? Invest, absolutely, isn't it? So you're going to grow it by investing. Do you understand? The progressive part is it grows. The regressive part is that if you have the same money, keep it like that, you're not investing anywhere, or someone is giving you the money after 1 year, the value of the money decreases. So that's time value twofold for you. Are you able to understand this? Okay, are you able to relate with all of that? Rishi has understood, so I hope all of you have been able to understand that too. Okay, now we'll be moving ahead and talking about the reasons for which the time value of money. Okay, why do we have this time value of money? So if we invest money in future, we get profit, so it's more better than use that money today. Yes, absolutely, Surya. That is what is summing up everything that I have discussed over here. Surya, summing up things. So that is absolutely correct. Okay. Yeah, not 10:30. We'll try to end it by 9:45, like that. Okay, so reasons for time value of money, what do we say? Okay, don't have money to lose or invest. Okay, that is the case with everyone, don't worry about it. But yeah, what we can say is we can just talk about it. Of course we can dream for it and work hard. Later on you definitely would be able to do that, right? If we buy gold as an, yeah, any way you invest it, I'm not saying a particular way, invest it anyway. I didn't talk about instruments. You can buy gold, that can also happen. Of course the government discourages, but still. So why this money has time value? Okay, what are the different reasons? One reason was already given by Mahima. What did she say? She said it's inflation. Can others give any other reason? ठीक है, my is saying inflation होगा तो money value reduce होगा या increase होगा. Obviously reduce होगा ना, inflation होगा तो money value is going to reduce definitely. ठीक है, तो reasons for to secure the future. Okay, yes, absolutely. So why does money has time value? Okay, Neil will tell. So Rishi is like, Neil is going to tell why it has time value. He said, okay, it's very simple, but he's saying Neil will tell. Okay, as I can understand. So Neil is explaining what is the main thing. The time value, one thing we saw in the first part is that Himani will try to end it by 9:30, but today we'll just extend a little. Okay, so first part is investment opportunity is there, so there's time value, very clearly understood, no doubt in this. Money available today is less risky. In future, someone has taken 10,000 and he says, I'll give you 10,000 after 1 year. Will he be able to give that 10,000? What would be the situation after 10,000? He might not remember you after 1 year. Okay, so is he going to give you the money back? It's very uncertain, isn't it? It's very risky to give someone money and then say, okay, I'll give you after 1 year 10,000 rupees. So that's absolutely another reason, because money available today is less risky. Yes, very good. All of your answers are absolutely correct, right? Due to inflation also, there is time value. Inflation reduces the purchasing power in future. Like I said, said, this is a basket of fruits. You might be able to purchase 2 baskets of fruits today, but in future you might not be able to purchase even 1 basket of fruit with that particular money. Yes, uncertainty, war. Yes, Simran, absolutely right. Changes in raw material prices. Yes, that is uncertainty. Changes in the prices, inflation. We can say increase in brokerage, scarcity of resources, allow money to flow in circulation. Yes, and finally there is another thing. If I just say someone is getting a salary of 10,000 and I'm saying, asking that person to invest all 10,000, will he be able to invest it? Yeah, I'll tell you the second point. No problem, Amisha. Will he be able to invest all that money? No, obviously you need some money for current consumption. You have to spend some money right now, isn't it? So that is another reason that money that that is available right now is actually helping you. It has some value today, because you have to spend it and go for some consumption, isn't it? So that is another reason. Talking about the second point, I said money available today is less risky. Okay, let's say 10,000 rupees available today. Like I asked you the question, with that I think it should be clear, but still, like I asked you the question, 10,000 rupees available today versus 10,000 rupees available after 1 year, which is something that you are very safe with, okay, which is something that you would prefer. Amisha, can you and others, can you please answer? Specifically Amisha. Today, right? So why are we saying today? Because it is less risky. After 1 year, we don't know what are we able to buy. After 1 year, let's say someone has promised you that I'll give you 10,000 after 1 year. We don't know that person will be alive or not. Okay, that is also not certain. In that case, we cannot trust, because it is very risky to just leave that money till 1 year, not investing it anywhere. Okay, so that is why money available today is less risky, while money available in future is highly risky. The same amount of money if you're talking about. Is that very clear, Amisha? Is it clear? Prabjit, first point is like, it is very easy, right? You are investing money, so it has time value. Okay, 10,000 rupees if you invest today, it is going to grow to 10,500. I gave you the example, isn't it? 5% per annum. So obviously we can say investment opportunity actually is one reason because of which money has time value. Is that very clear, Prabjit and others, right? So first point is very simple. I think initially I just said. I hope it is clear now with the example too. So these are the 4 reasons. Will you be able to remember? First one is simple, investment opportunity. Then the money available today is less risky in comparison to money that you might be getting in future. Okay, so this is the progressive part. This is the regressive part. Okay, then inflation is again the regressive part, wherein you are just the money that you have is getting eroded. Apart from that, there is need for current consumption. This is a altogether different thing. Okay, so are these 4 reasons clear? Will you be able to remember all the 4 reasons? Yes, I hope so. So if you will have to remember, and are you able to remember, that will be clear with the Lord Narasimha rapid fire round. So I hope you're ready for that. Here is the first question. Please try to answer while I address some of the doubts. Goods, wait for the prices to go down. Yes, that is what is time value. We wait for the prices to go down, isn't it? So with time that happens, so that also comes under time value. Might be inflation, deflation, both things are time value only. Himani, is that clear? Himani, you yourself have given an example of time value, right? So we are talking about time value. It might be inflation. I have given an example of inflation. Himani is giving an example of deflation also. Many a times the prices reduce, we wait for it. Yes, why do we wait? Because it has time value, isn't it? Yes, if you see, this time value of money primarily states that money loses value only due to inflation. That is not only, it does lose value because of inflation, but it's not only. So that might not be correct. Money today is worth more than the same amount in the future. Okay, whatever money you have today is worth more than in the future. Like I said, money that you have today, you can buy 2 baskets of fruits, but money in future you might be able to buy only 1 basket of fruit with the same amount of money. So it's worth more right now. Okay, worth more goods, worth more services. So that's right. Future money is always more valuable. No, you cannot say always. If you have invested, it might be, otherwise it is not. Money value remains constant over time. Why would we study time value of money? Entire chapter on that. Money available today is more risky. Money available today is what risky? Who will tell me the answer for this? Dash risky. Tell me. We have discussed this. So please, the correct answer is B. Charushi, Pragati, Vartika. Yes. Mahima, Priyadarshini, Riya, all of your answers are absolutely right. Punri. Sorry, I'm unable to pronounce your name. Your answer is right. Ambition Dream Amit Vikas. Okay, why? What can we replace this more with? Yes, absolutely, we can replace it with less, isn't it? Siddharth, Charush, absolutely, all your answers are right. Money available today is less risky. I hope that is making things clear for you. Moving to the next question, please try to answer this. Yes, Rohini, Amit, Simran, Vikrant, Samriddhi, Sarvottam, your answers are absolutely right. So inflation impacts time value of money because of what? Why does inflation impact time value of money? Yes, I think all of you have given correct answers. It increases savings, it increases the interest rates always, it reduces purchasing power over time. That is more relatable, always eliminates uncertainty. Inflation creates uncertainty. Actually, it increases production. No. Okay, so actually it reduces the purchasing power over time. Okay, as I said, inflation, because of that, you are able to buy 2 baskets of fruits today. The purchasing power is reduced. What is this purchasing power? How many goods and services you can purchase? That is getting reduced. Okay, it is 2 here. The power has reduced to 1 in future because of inflation, because of the rise in the prices, isn't it? So yes, that is another regressive aspect of the time value of money. So Charushri, Anish, Daksh, Tanvi, Pragati, all your answers are right. And absolutely over here, if we see yeah, PUN, I am sorry, I am unable to pronounce your name. And Ambition Dream, Kanika, Amisha, answers are right. Simran also answer is right. Ishita, your answers are right. Okay, so that was our very first part. We'll see a little more and then we'll end the session. Okay, so for today, tomorrow will be beginning from where we have stopped over here. Will we get notes of PDF for this class? Yes, you will get this PPT's PDF, right? I'll be sharing it in the chat. And others would be whoever has been unable to join. I'm so sorry. You'll be getting it in on our course itself. The PDF will be uploaded there, so don't worry. So now we'll talk a little about the techniques of this time value of money quickly, and then we'll move ahead. Okay, so we're talking about some part of the techniques. What we can say now, this Neil is actually having some ambition. That his father, whatever he is earning, they want to reach to a figure which is 1 crore. It said that reaching 1 crore in the at the first time is actually much more difficult than going ahead of 1 crore. Okay, 1 crore, 2 crore, 3 crore, that's easy. But reaching 1 crore for the first time is actually difficult. So he's just asking Professor Vinay, because his name also says that he's going to, he will be able to help with that. So he's asking Professor Vinay, how can we invest in such a manner that we reach 1 crore, and what would the time required for that? You'll have to do a lot of calculations for that. Let's see what are the calculations that can be done. Okay, and we'll see a few of them today, and the rest we'll be seeing tomorrow. So we'll talk about a few techniques of this time value of money. Okay, we also want to reach 1 crore. Okay, whatever we might be earning with. So let's see through this that till where can we reach. Okay, and what might be the technique. We will do exactly this in the next part. That is what Professor Vinay is saying. So here comes Selvin saying you can invest in as Selvin says. So but Selvin might not give the right investment related advice. So there is some caution with respect to investing, as Selvin says. So we'll move ahead and see the techniques first, and then we'll talk to Selvin. Okay, so Rishi is angry of course with the wrong things that Selvin might be telling over here. First of all, we'll be talking about one particular aspect, that is present and future value of money. Okay, so we just discussed, very simple. If we just talk about what example we had taken in the beginning of this particular chapter, that we said that if we have 10,000 rupees, like many of you also pointed out, 10,000 rupees is being invested. Okay, that is being invested, and after 1 year at 5% per annum, that is going to grow at grow to 10,500. Okay, that whatever money you have invested presently, okay, the beginning, that is called present value. Does that make sense? The money that you are getting in future, after that money has grown because of the investment that you have done, that is called the future value. Okay, does that make sense? If I just ask you, the present value is 10,000 while the money is being invested at 10%, can you tell me what is the future value? Okay, can you just quickly tell me what is the future value over here? Yes, he was born on the start of financial year. 1st of April is his birthday, by the way. Yes, absolutely right. This live session would be uploaded, right? The recorded format. Please give us some time. Okay, bear with us. We'll be uploading it as soon as possible. Might be by the evening, and then you can get the recorded part. Okay. Rishu Ritik. Okay, is that fine? Yes, the future value will be 11,000. How, sir? So 10,000 growing at 10% would give you how much? That would be around 1000. Okay, I hope you know, cancelling these out, you will be getting 1000. So add that 1000 to the 10,000, that will be giving you an amount of 11,000. Okay, so the future value is 11,000. Is that understood? The basic concept of present value and future value, is it understood? Now moving ahead, if we talk a little more about these things, right? The basic concept is understood to us that yeah, present value, if invested properly, it will give some amount at the future, that is called the future value, right? Can we say this future value is nothing but addition or sum of the present value and the interest that we have obtained over here? Can we say this particular formula is right? Yes, the present value is 10,000, and to that the interest, let's say in this case, is 500, that is being added up. So present value and interest are being added up to get this particular thing, which is called the future value, right? That is absolutely right. So he's also happy over here, you know him, I guess, right? So this is talking about this interest. So what grows the present value to the future value? Okay, talking about that, there are two ways of growing it. One is called the simple interest, right? And the Joey, yes, you know him. Okay, then we have the other part. Yes, Vatika. So we have the other part, which is compound interest. So we'll be talking about these two interests very quickly, right? So first of all, we'll be talking about the simple interest, right? What is happening in simple interest is whatever 10,000 rupees you have invested. Let's say this time what we are doing is the rate of interest per annum, the growth in the particular amount, we are taking it to be 10% per annum. Every year it is growing by 10%. And over here we have the time period which is around 3 years. Okay, so let's just calculate and see over here what is happening. 10,000 rupees, if it grows for 3 years in a simple manner, what is going to happen? So 10,000 rupees in the first year at 10%, how much will be the interest that would be coming out of this particular part, right? You know it is 1000. 10,000 rupees in the second year, right? 10%, you will be getting again 1000 rupees is second year, and then the third year also we are taking the same 10,000, and that is getting growing by 10%. So again you are getting 1000. So the total interest that you are gaining as far as the 3 years are concerned, yes, absolutely, I hope it is very clear, in all the 3 years that is growing to 3000. Okay, but what could actually happen over here, right? The interest has grown to 3000. So what can we say? The amount over here is what? Or we can say, not talking in this term, talking about future value. What is it all about? The present value, what you have invested is 10,000, and then you're getting the interest. This time we'll have to add the total interest, right? So 10,000, that basic principal amount that you have, present value that you have invested, that will come back, but along with that the entire interest would also be coming back. Okay, so the total amount is 13,000. Is that very clear? So that is, which is something which is called simple interest. So instead of calculating it like this, what else can we do? How else can we actually calculate it, calculating for 1 year like that? What else can be done over here? Right? Yes, we can use a particular formula. How did that formula come into being? So simply, if you calculate 10,000, this is the principal amount. This is called the principal or the present value, right? This 10,000, if you want to calculate what is the interest that is being gained out of this 10,000, if it is invested at 10%, so you will do into 10 by 100. Okay, and here we have 3 years. If you just multiply it with the number of years, will not we get the answer into 3? Okay, into 3, then what are we going to get? We are going to get this 3000 as a result of this particular equation. So that is total interest being calculated by this formula, which is called P into T into R, or P into R into T, whatever you can say. P into T into R by 100. PTR by 100 we generally call it, and that's the formula for the simple interest. It's a formula for the simple interest understood to everyone. Simply multiplying the principal or the present value to the rate percent. Rate percent, you just cannot take 10, it is 10%. So the 100 will come in the denominator, that is 100. And the number of years that you have over here, just multiply that to this thing, because we are taking the same thing and we are calculating. So that gives out an interest of 3000 added to the present value to get the future value. Is the concept of simple interest very clear to all of you? Can you just tell me? Yes, absolutely. Simran, Sarita, your answers are absolutely right. Okay, the concept is very clear, isn't it? So that's simple interest for you. Now we'll be talking about the compound interest. Okay, so this is something that is fine, that's good. That simple interest is actually helping it gaining some profit. But can we try to quickly gain the profit? Okay, taking the same time period. Let's say we invest the money in the same time period, but you want to gain profit quickly. What other thing can be done over here? We have taken, I'll be doing it quickly. Okay, instead of introducing the formula to you, first of all let me tell you the concept that 10,000 rupees is being invested in the first year. Okay, so 10% at 10%, what is the interest that is going to be coming out of this? It is 1000 rupees, isn't it? Now adding the principal amount to it after 1 year, what will that totally come out as? Can we say it comes out as 11,000? What happens in compound interest is, yes, I'll end with compound interest. Okay, is that fine? I'll end with that. Okay, so what happens in compound interest is, whatever is the total amount that you are gaining at the end of the first year, that is being invested again. Okay, so like previously we saw in simple interest 10,000, 10,000, 10,000. In the 3 years, same amount is being invested. But in compound interest, this amount that you have got after first year, that is 11,000, will be invested for the second year. Do you get the difference? Right? What happens in the compound interest part? You have to choose the option, of course. Right? Yes, the interest is getting added to the principal, and that is being invested in the second year. Okay, now we will have this 11,000 being raised and the interest being calculated at 10%. Tell me what is the value for this interest? Absolutely. Please tell me what is this going to amount? So banks actually, when you deposit, you get simple interest, but when you take loan, you are taking it at compound interest. Okay. Yes, that will amount the interest would be coming out over here. That would be around 1100. Now adding that to what is the principal for the second year? Who will tell me? Okay, basically in compound interest, the principal amount plus interest amount is compounded. Yes, unlike the simple interest. Okay, what shall I write over here? Shall I write 10,000? No, the principal for the second year has changed and it has become 11,000. You have invested 11,000 and you are getting 1100 as the interest. So what is that going to amount to for me? Okay, can I say it is 12100? Okay, this is the amount that we are talking about. Okay, yeah. Now for the third year, what is going to happen? What shall I write over here? Can anyone tell me? What shall I write over here? What will be my principal amount for the third year? Yes, 12100 is the principal for the third year. 10%. What would be the interest? Please tell me quickly. Right, what would be the interest over here? It would be 1210. Right, now adding 12100 to that, what are you going to get? Yes, 133, 13,310. Now if you compare with simple interest, you got only 13,000, but with compound interest you are going to get how much? What is the difference? What is the extra part as far as using compound interest over here? 310 rupees extra interest is something that you're going to gain. That is the magic of interest over interest, and that is compound interest. And it is very difficult if we, let's say we have calculated it for 3 years and the numbers are simple, we did it quickly, but it takes time so as to calculate this. So we have a specific formula. We are not going into the derivation of the formula, but yeah, I'm just giving you the formula as such. Formula so as to calculate the final amount. Directly you'll be getting the amount as far as investing a particular amount in at compound interest is concerned. Okay, so what is that formula? Amount will be calculated by multiplying the principal or the present value. This is something that you will have to remember. I would say 1 plus R. Okay, R is the rate percent over here, R to the power T. Okay, t is nothing but the time. You can see 3 years over here, 8% is 10%. So if you substitute all of these, you will have to, you can use a calculator too, but yeah, if you calculate this 10,000 into 1 plus r. Now how shall I write this r? R is nothing but 10%, so 10 by 100. How shall I write it in decimals? What would I write over here? Can you just tell me very quickly? What would I write over here? Yes, it will be written as 0.10 or 0.1. You can simply write it as to the power t, which is nothing but 3 years over here. Number of years over here is 3. So that is around 10,000 into 1.1 to the power 3. What does that give us? Yeah, you can use calculator for now. Yeah, right, so you can use it in the exam also. If there is requirement, of course you might be having some arrangement for that. What they do in the exam is they won't give you a calculator, they will give you the value for 1.1 to the power 3, let's say. Okay, they will give you the value for it in the question itself, and then you can just multiply and calculate what it will come out. So I think 1.1 to the power 3 is very easy to calculate, it's not that difficult. So 10,000 into 1.331 is something that you are going to get. Is everyone getting that? So what will be the amount? 13310. Isn't it the same that as we have calculated previously? So this is the correct formula for this compound interest calculation. Is that very clear? Please tell me, is it clear till here? Okay. Is it clear till here, and are you able to understand that yes, that is going to amount to 13,310. Now comparing both the types of interest, we can very clearly understand that yes, here we have compound interest, which is something going to give you higher amount at the end. So interest earned via compound interest is higher. Yes, absolutely. Simran is also saying, and everybody has understood, I think, that here the interest gained by compound interest is higher in comparison to the simple interest. Yes, the rate is taken as 10%. 10% in the sense, percent का मतलब क्या होता है? Okay, percent means per 100. So this itself, the symbol itself means it has to be divided by 100, 10 by 100. Okay, so that is something which is the normal rate, right? For every 100 values, the 10 values of interest is something that you're going to gain. That is the thing. Okay, so 10%, and that will be written as 0.1. Okay, so with that we have completed this particular part. Tomorrow we'll be talking about compounding frequency, and on that note, if you did like this session, you can share your feedback at feedback@edutab.co.in. I would request everyone, if you have 1 extra minute right now, you can please share your feedback. How did you like the session, or if you have anything, any suggestions with respect to the session, how we can improve. My name is Surinder Singh, so you can please do let us know, right? How many of you understood things really well? You can tell me over here. Apart from that, people who are on YouTube, I would like to tell you that today and tomorrow we'll be having demo sessions. In the evening we are also having the class with respect to English, right? So you can attend that. So demo sessions are being conducted for 2 days, and rest of the classes would be conducted over the course, okay, over Zoom. So you can please join if you did like these sessions. If you're really serious about preparing for the particular RBI Grade B examination, you can please be part of the course. The link for it will be provided in the description. It is there in the description of this particular video. Apart from that, let me just show it to you. If you go over this edutab.in, there you can actually find the part from where you can actually enroll into the courses. If you see courses over here, RBI Grade B courses, right? So we have the gold and the silver package which you can be part of. Gold is actually a comprehensive course wherein phase 1, phase 2 interview, all of those parts, everything related to all of these 3 phases of the examination. You are getting everything that you can imagine, like these live sessions are there, the concept classes are there, recorded videos, notes, summary sheets, mock tests, right? So all previous year questions are there, chapter wise, sectional, current affairs, full and mock test, everything. And apart from that, there is a silver course wherein you have, if you are like I am very much pretty sure about phase 1, then you can go for the silver course wherein you can enroll with respect to the phase 2 only. Okay, if you are like confused, you can go for our demo course. Okay, you can just pay 1 rupee and go for the demo course, and there you will be getting 2 days access to the gold course, see everything. If you're feeling yes, everything is fine, then you can enroll. And if you did like today's session, also these sessions are demo, right? So after 2 days they'll be conducted only over Zoom. Okay, so for everyone who has joined through YouTube, I would like all of you to please join the course, right? And the link for it is given in the description of this particular video. Yes, I'll answer all of your questions. One thing that I would like to request all of you is, if you did like the session, you can please take a minute and share your valuable feedback at feedback@edutab.co.in. My name is Surinder again. Okay, I'll be sharing the PDF right now over Zoom, and others right, who have been able to join, I'm really sorry for that. You will be getting the PDF which would be uploaded as far as part of the course. Okay, in the course the PDF would be uploaded, and let me just share this to you. Just a second, I'm sharing the PDF to all of you, right? And apart from that, you can please if you have any doubts and questions, you can keep asking. I'm just taking up your questions. And apart from that, people over YouTube, you can be part of these sessions by actually joining the course. Okay, let me tell you again that this is a demo class. 2 days it would be conducted over YouTube also, right? And the rest of the sessions you can be part of by being part of the course. Okay, I showed you how to be part of the course, how to enroll yourself in the course. Just give me a second. Yeah, I'm just sharing the PDF with all of you. Please do tell me, have you received it? Any WhatsApp group? No, I'm not sure about it. Ankita, you can call over the number 8146207241 and ask for the same. I don't think there is any group like that. Like at the compilation notes, sir. No, you have the notes uploaded, right? You will be getting the notes, as I said. If you're part of the gold course or silver course, right, you'll be getting the notes there itself. You need not make any notes yourself, right? This is for everyone over YouTube too. You need not make any notes. You're getting the notes. There's a concept notes. There's also summary sheet for the revision part. Okay, the notes has been prepared in a concise manner. Nitish, I think that is clear. So shall we follow the live classes? See, you can follow the live classes, or you can go through the recorded lectures, right? It's up to you. Live classes are like more interactive, wherein you can actually interact, you can ask your doubts, you can answer the questions right here and understand things right then and there. Like recorded sessions are like many people want, I will prepare at my own pace. For them, the recorded sessions are better. Okay, so you can choose from both of those. Lama, is that fine if I've answered your question? Current consumption relate to time value of money, reducing amount of money available for what to do. Yes, current consumption is one of the reasons for time value, because money that is available right now is much more valuable than the same amount of money available in future, isn't it? 10,000 available right now, you can spend it, you can invest it. That is much more valuable than getting 10,000 after 1 year. As I said, Pranav, is that clear? So is the material provided in the course enough? Yes, that is enough. That is a lot of material provided to you. Everything is updated, right? You have seen a new FM course, right? So you can follow that. बेसिक चीज अगर कोई चीज ऐसी जिसी से इंश्योर्ड है तो वो सिक्योर्ड है. यस आयुष, अगर इंश्योर्ड है तो वो सिक्योर्ड है. एब्सोल्युटली. कमर्शियल पेपर्स तेजस विल डिस्कस इन डिटेल. यू वोंट बी एबल टू अंडरस्टैंड एज सच immediately, but that is a source by which, instrument by which we can say companies actually try to gain money from people, invest it in their own particular company and activities that they are doing, and get profit, then distribute it, isn't it? That is a sort of a commercial paper, is a sort of bonds that the corporates issue for the short term. I can say this for now. If I attempt 2028, what's the best to follow, live classes or recorded ones? Okay, see, as I said, live classes, recorded the classes, the decision has to be taken based upon how you want to prepare. Okay, are you like a person who wants an active sort of preparation? Live classes are the best thing. You are a person who wants to prepare at your own pace, then the recorded sessions are the best thing. Okay, yes, thank you so much Arushi and others. You can just tell me. phase 2 other subjects, the classes are there. Okay, there's a whole schedule given to you and those will be conducted, right? Himani, is that fine? And I would again request all of you, I think you have been able to get the PDF. Have you been able to download? Did you get the PDF of this class? And others over YouTube, once more I would like to tell you that yes, please try to join over Zoom and please try to be part of this session. These are demo sessions and after that the sessions would be conducted over Zoom only. Yes, proper timetable is there, Himani. Tejas has shared. Okay. Hard copy of books. Okay, hard copy is not there. You can take the printout of the summary sheets and make a copy of it. Thank you so much, Subhash. I hope things are clear. Pragati, thank you. Yes, whoever want to leave can leave. If you have any doubt, you can stay and ask the doubt. Okay, thank you so much everyone. And before leaving, once again I would like to request all of you that if you could share your feedback, whatever you did feel, take a minute and however you did feel with respect to the class, you can please let us know the feedback at feedback@edutab.co.in. Okay, so this is a mail ID. You can just share so that we can improve if there is anything that is lacking. Otherwise, if you did feel good, it's the total thing done by the entire team, so the entire team would get to know that yeah, things are going in the right direction. Okay, so your feedback is something that would matter a lot. And if there's anyone who wants to leave, you can leave. हिंदी में ट्राई करेंगे, हिंदी में भी बोलने का, ठीक है, बट सबका जो है दिमाग में रखे कि सबको ये बेनिफिट हो. इंग्लिश में बोला जा रहा है, आपको कोई दिक्कत हो रही है बीच में तो यू कैन आस्क मी, मैं इंग्लिश में भी बता सकता हूँ आपको, बट या द क्लास वुड बी मोस्टली इन इंग्लिश ओनली. आई एम सॉरी अबाउट दैट. यस ग्रिलॉन, आपका क्वेश्चन मैंने आंसर कर दिया है आई थिंक. श्योर, ओके. Yeah, Surya, that is fine. If you can manage everything, that is fine. Thank you so much, Soumya. If everyone did feel yes, the session was good, and even over YouTube, you can share your feedback over here. And I hope you all have received the PDF. TVM is dependent on other factors apart from interest. Then why does a FE formula only consider interest? See, other factors are included into it. The rate is included into it. The time is included into it, right? So those are the main factors. Okay, bye Shreya. Okay, let's meet tomorrow. Thank you so much. At the same time, evening you have the English class, so please do attend that. Thank you so much, Saurav. Bye. Over YouTube also, I think I've been able to answer. Rajiv, I've been able to answer actual formula. We also consider inflation. That is a simpler way, the things that I have given you, right? Inflation, it is another rate percent. Okay, that rate is considered into this. Inflation is something that we do not consider as such, I would say. For now, it does depend on inflation, but now we just consider the interest rate that we are investing and we just calculate the gross that we are going to get. But yeah, inflation reduces that amount that is there. Okay. Yeah, other factors are considered constant. Absolutely. Myra, I think your name is. I'm not sure. Timing of the class from tomorrow is you will be having the class starting from 7:30 in the morning. So please be on time. I'll try for that. If you have any doubt, you can ask me. Thank you so much, Karuna. Thanks a lot. What has been updated in the new consumption? Yeah, it has been Shobit Gupta. It has been made more readable. It has been made easier for you to retain. Okay, now it has been made concise so that you do not have to spend a lot of time on going through things, right? You can very quickly understand. There are images used in the notes and all, so it has been made much more easier to retain. You can write, like if somebody is already with the old FM, they can continue with it, but still if you want to just get an updated version of it, that's the new FM. Okay, so you can shift to that. Is that clear? Yes, Anukriti, thank you so much. Yes, so I think I have been able to answer all your doubts. And yeah, thanks a lot. Sure. Yes, so allow me to end the session. Yeah. Okay. Yes. So thank you so much once again for people who are over YouTube. You can be part of these sessions by actually joining the course. 2 days we'll be conducting the demo classes so that you can have a look at how these classes are being conducted. If you're really interested to get a guided way to prepare for your examination, you can actually be part of it. And if there's anyone who wants to say something, you can please unmute yourself, and if you want, you can just let us know how did you feel about the classes, right? You can unmute yourself and let me know if you want to say something over here. Tannu, sorry so much. Right, we have increased the actual limit. I think somehow it is not getting reflected. So all of you, if you want to say something, anybody wants to say something, you can let me know. Otherwise we'll end the session. We'll try to upload it as soon as possible. Might be by the, actually I can promise you by tomorrow, but yeah, we'll try to do it by today itself. Okay.
Hello, sir.
Hi, Tejas, how are you? I
Yeah.
think
So, will these classes will be comprehensive like the recorded ones?
yes, we have tried to make it as far as possible, as comprehensive as possible. But yeah, there might be some examples that we might reduce on. Okay, there might be some concepts which might not be that important, which would not be included. Okay, but mostly it is uh, covering the entire syllabus. Okay, Tejas,
Yeah, got it.
you can
Thank
rest
you.
assured. How was the class? Did you find it that you have
Yes,
been able to understand things?
yeah. I was quite aware of the overview, so I found it beneficial.
Yes. Okay. Thank you so much. So see you tomorrow also. All the
Sure.
best. Okay. Thanks a lot. So let's meet tomorrow again at 7:30 a.m. and over YouTube also we'll be having it at 7:30 a.m. Again, if you did like, you can share your feedback at feedback@edutab.co.in. Thank you so much. Allow me to end the session. Thanks a lot.